All right. Okay. So, good morning, everyone. I welcome you all to this class. So today we are going to continue with our ethics. I hope we can see my screen.
Yeah.
Okay, good. All right. So today we are going to continue with ethics. So, in our previous classes, we have actually discussed about ethics in the investment industry. We also went ahead to the second topic and talked about the codes and standards. And we enter the third topic where we are discussing about the guidance. Okay. So we said that the standards of professional conduct are 7. So what we have done so far is that we have actually looked at 3 of them. So we have about 4 of them remaining. So today we are going to continue with the standards of professional conduct. So we have the fourth standard, which is duties to our employers. Okay, so today we are going to look at all the whole individual thing required for us to comply and meet up with our duties to our employer. So we are going to start with the first one. So like we do, if you have any question as we proceed, please do let me know. And also if you have any contribution to make, also let me know. All right, so we are going to start with the first one, which is called loyalty. So, like we do, I will read out what the standard says, then I'll go ahead to tell you, the detailed things that you need to do in order to be in compliance with this standard. So, it says that in all matters related to their employment, members and candidates must act for the benefit of their employer and not deprive their employer of the advantage of their skills and abilities, divulge confidential information, or otherwise cause harm to their employer. So, in summary, what the standard is saying in that you should be loyal to your employer. So, simply, you as a member or a candidate, you are required to protect the firm's interest by avoiding any behavior at all that can harm the firm, deprive it of profit or deprive it of your skills and your ability. So, as being a CFA candidate, all the whole skills or knowledge or any ability you have gathered from being a candidate, this standard says that you should actually, make sure that your employer is benefiting from this ability. And to be loyal to your employer, you are not to do anything that will cause them harm or actually deprive them profit. So let's look at some of the, detailed guidance that we need to follow. Okay. So, like we said earlier on, we said when we were talking about diligence and loyalty to our client, we said the what do they call it? The priority is our client first, followed by employer, then you. Okay, so clients, employer, you, the member, and candidate. So that's actually what we said. Okay, but this standard tried to wake up one fact, and it tries to let us know that in as much as the goal is to always prioritize our clients over our employer, we should also consider the impact of any action you are taking on the firm's sustainability and integrity. And like we have said, any conduct at all that can actually be detrimental to your employer, you must not engage in those conduct. So if you notice, I bolded those words, very important. So anything at all that can actually, be detrimental to employers' interests, you're not to engage in them. Okay. And also, if your employer have any policies or procedures, and those policies and procedures doesn't conflict with the laws, regulation, and code and standard, this standard says that you must comply with those policies and procedure. Okay. So you notice it's twofold. So you don't engage in anything that is detrimental to your employer. And also, if your employer has any policy and procedure on ground, according to this standard, you are to comply with those policies and procedure. So as we proceed in this reading, I'm going to show you some examples of things that you are not to do that can easily conflict with this standard. Some of those things that they can easily test to know whether a candidate or a member, it's actually violating the standard. Now, there is one thing you need to note about this standard. So, this standard does not actually demand that you always place your employer's interest over your own interest in all situations. Okay. So, notice the keyword again, in all situations. So, there are certain situations sometimes that might come up, and you need to dialogue with your employer so that you can balance your personal and work obligation. So let's say, according to your employer's, rules and regulation, you are to resume work a certain time of the day. So, in order to meet up this standard, you have to actually comply. But let's say probably, on the day you were meant to go to work, let's say something happened, an emergency came up, a family emergency that you need to attend to. Okay. So, in that kind of case, you might have to communicate with your employer that because of the current situation, that you might not, be able to meet up with their procedure of, resuming at a particular time or whatever. So that is actually one of the things you need to note about the standard. So like we said earlier on, it's client first, employer second, then you. But like as you can see from these things still, in as much as we are putting clients first, still consider whatever you do, how it's going to impact the firm's sustainability and integrity. Also, in as much as we are putting the employer above the member and candidate, still know that there are certain situations that can also come up that might make you not to meet up with that hierarchy. In that kind of case, there has to be a dialogue with your employer to make sure that your personal and personal life and work obligations are balanced. I hope we're together.
Yes, please.
All right, good. Let's go on. So if you have any question, please, you are free to ask. Okay. According to the standards, so we have employers and responsibilities. Okay. So we have talked about, so obviously whenever you are working with somebody, so you're an employee, like we said earlier on, you are under this person. Now remember, we have said that sometimes your employer can have policies and procedures which you must actually adhere to. Now, one thing you need to notice is, so in case if you see this in the questions, you don't get carried away. So your employers are not actually obligated to adhere to the codes and standards. So remember, instead, the people that are required to adhere to the codes and standards are CFA candidates and also CFA charter holders. Okay. So those are actually the persons that code and standards, are required to actually adhere to them. But your employers are not really obligated to, adhere to the codes and standard. Although, if your employers are really looking to attract charter holders and, candidates, then, they need to make sure that whatever policy and procedures they have on ground doesn't conflict with the codes and standards, because the CFA charter holders and candidates are required to adhere to them. Okay, so if there are conflicts, then it might be difficult for such employers to attract charter holders candidates. Now, if you're a member or you're a candidate, you're actually encouraged to provide your employer with a copy of your code and standards. So this one is not compulsory, it's an encouragement. Okay, so it's something that you are encouraged to do, but if you don't do it, it's not a violation of the codes and standards. Then we have independent practice. Okay, we have independent practice. So sometimes as a member or a candidate, you might want to go into an independent practice, right? Now, according to this standard, standard on loyalty, okay, it says that members and candidates are to abstain from independent competitive activity that could conflict with the interest of their employer. So although this standard doesn't preclude members and candidates from entering into an independent business while still employed, So, but if you plan to enter or engage into any form of independent practice that you're going to be compensated for, you actually have to, notify your employer and also describe the type of services that you are going to be rendering to the client. Okay. You are also to, inform your employer about the expected duration of the service and also the compensation that you are going to, get. And this standard says that you are not actually to render any of those services until you receive a cost set from your employer. Okay. Okay. So that's actually one thing you need to actually know. I hope we're together. Is there any question on this?
Nothing yet.
All right. All right, good. Let's go. Then what about when you are leaving your employer? So let's say you have worked for an employer for a certain time and probably you decide to leave to set up your own practice, or you decide to leave to go and work with another employer. So these standards are actually the relevant standards that apply. So the first thing is that whenever you are planning to leave your current employer, you should actually continue to act in that employer's best interest until your resignation becomes effective. Okay. So let's say you have tendered in your resignation, and according to the company's policy, you have to tender it, let's say 2 weeks before leaving. Okay. So once you tender it, within that still 2 weeks, you are still to, keep on acting in the best interest of the employer till that resignation becomes effective. Now, there are certain things that you can do as a member or a candidate, and that can actually constitute violation, okay, when you are leaving your employer. So one of them is misappropriating of trade secrets. So probably, you are already planning on leaving. Because of that, you now start misappropriating the trade secrets of your employer or even the client list. So you are leaving, and because of that, you start, you start probably, if depending on the nature of your firm, maybe if there is a place they store clients information and everything, you just went there and start taking up clients information and details and all those kind of things. That will actually be considered a violation when you are leaving. Another one is before cessation of your employment, you start soliciting your employer's clients. Okay, so let's say you have tendered in the resignation and you are still with the firm, still going to work, and you start calling up the clients, or maybe probably if any clients comes into the business premises, you are telling them, I'm leaving, come and join me in my new place, come and join me in my new place, and all those kind of things. That would also be considered a violation. Okay. Then again, any self-dealing. Okay. So if you start appropriating for yourself the property, maybe the business opportunities. Okay. So maybe if probably someone is coming to do business with the firm and you are seizing the opportunity because you are leaving to convince those persons to come and do business with your own firm or the new place you are moving with, all those things will be considered a violation. Also, any misuse of the company's confidential information. So if there is any confidential company information that you have in your possession or you try to gain access to during that period to make use of, all these things would be likely, considered violation. Now, what about firm's record? So there are certain times, based on the fact that you are working with a firm, you might have some of those firm's record. Okay, probably it might be stored in your flash drive, your computer, your hard drive, or whatever. Okay, so if you are leaving, a particular employer, you are actually not to take any of their records or files without their permission. In fact, a written permission is required for you to actually take that, because any file or records generated while you're working with a particular employer is actually their property. Okay. So if you are going to live with such property, you actually need to, get a written permission from that employer before you can actually do that. Now, when you are working with any particular employer, sometimes you will gain knowledge, you will gain experience, you will gain skills. Now, if there is any skill, knowledge, or experience that you gain from working with any employer, you are free to use it when you start your own. You are free to use it. Probably if you move to a new what do they call it, employer. Those kind of things are not considered violation, because those kind of information are not really privileged or confidential information. Okay. Let's say also if the names of your employer's clients that you lent during the period of working with that employer, it's not also considered a confidential information. Okay. So you can actually still keep those names. Actually, nobody's requiring you to format those things. Okay. So like we said, so if you are going to be living, you are not really to start soliciting your employer's clients. Okay. But once your what do they call it? Once your leave because your resignation becomes effective, according to this standard, if there is any public way, okay, if there is any public way you get to, meet up with the clients somewhere, you can actually tell them, so I've moved on, I'm with this new firm, so you can actually come and join us, okay? But the key thing is that let it not be that you took your employer's client list. I hope we're together.
Yes.
Yeah. Let it not be that you took your employer's client list. That one would actually be a violation. But you're actually free to use public information after departing to contact your former clients without actually violating the standard, except there is a specific agreement with your employer that you're not allowed to do that. If such agreement doesn't exist, you can actually do that once you have left. You can use public information to solicit those clients. Then again, like we said, any record or any work you performed on behalf of your clients, whether you stored it at your home in paper or electronically or whatever, it's actually the employer's property. Okay. So once you are leaving, according to this standard, you are actually to return those documents or those work to your employer, or if it's the ones you have on your system, according to this standard, you are actually to erase them, okay? Except you have collected a written permission from your firm to actually keep those records. So if your firm permits you to use those records, then you can actually use them and keep them. But if your firm doesn't permit, according to this standard, you are to erase or return those documents to your firm. Okay. And like we have said, we are actually free to use public information to contact from our clients without violating this standard, so far as there is no specific arrangement or agreement not to do that. Now, sometimes firms do have what we call non-compete agreement. I hope we know what this thing means.
Non-compete agreement.
Yes.
Yeah, I think I have an idea. Just like probably if you join, I think it's just, let me give you why I think it is.
Okay. All right. All
Let's
right.
maybe if I leave my employer for a certain
Mm-hmm.
period of time, I might not be able to do some of the stuff they do, or I might not be able
Mm-hmm.
to
Mm-hmm.
take
Yeah.
their client or customer for a certain
Mm-hmm.
period
Mm-hmm.
of year, maybe
Mm-hmm.
18 months or 1 year or 2 years.
Mm-hmm.
That's why I think
Mm-hmm.
non-compete.
Yeah. 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 Yes. Yes. Perhaps you actually explained it clearly, very clear. Yes. So those things are non-compete agreements. Yeah.
Sorry,
So if okay.
can I ask a question in respect of the last slide?
Okay. Okay. All right. Go ahead, please.
Yeah. So can you go back to, yeah, okay, yeah. Now, this misappropriation of trade secrets. I just want to
Yeah.
know what's that exactly? When you say misappropriation of trade secret, does it mean if
Okay.
I leave my employer, They are trade secrets. I cannot make use of it, or what exactly is that?
Okay, so okay, good question. In fact, if you go through the curriculum, they didn't really explain it in depth. Okay, but for my own understanding, now when we are talking about misappropriation, like they said something. Obviously, there are certain experience, knowledge, and skills that you learned from your employer, right? You can
Yeah.
freely use those items, right? But let's say if you work in an organization like Coca-Cola, whereby you know that things like their mixture or how they mix their drink, all those things are secrets. It's not something they open up to every employer, right? And
Yeah.
most of those things are actually locked up, like they are locked up. So if you are going to be working with them, probably, I don't know, they might have some protocols, on how those informations are to be used, right? So if any employer you are working with have those kind of trade secret, that means it's their property. Okay. So if they have any rules and regulation on how those secrets are to be used, that means I believe this is saying that you are to adhere to those protocols. Okay.
Okay.
Yes, I believe that's what they mean by that. So if there is any protocol on it or any standard on it, I believe you are to actually adhere and not to go against those things and not to use those things, outside what they already have on ground. I hope that's clear.
Yeah, that's fine.
Okay, good. All right, so we have a standard on social media. I think we have actually talked about the social media thing before. Okay, so according to this standard, if your employer has any policy on the social media use, you are actually to adhere to those policies. Okay, so let's say they said there was a point somewhere in the reading where we talked about the social media, so you just still assume that social media is like still you communicating normally with your employers or maybe clients or whatever. So any policy at all, any policy at all. So we have social media like LinkedIn, Twitter, Facebook, and all those things, right? Yeah. So any policy at all your employer puts on ground that you are to adhere to when using social media, this standard also says that you are actually to adhere with it. In fact, this actually becomes so important when you are leaving your employer. So according to this standard, if you are leaving, if there is any social media account that is the company's social media account, probably you are to transfer those accounts to the company. So if it requires that your access to the social media account to be deleted, then it has to be deleted. If it requires it to be transferred to the new person taking up the management or whatever, you are also to transfer it. And according to this standard, the best practice means that you should try to separate your personal and professional social media accounts. Okay, so let's try to separate that. This thing, just the same way that happens if you are working in a particular organization, you have your personal email and you have your professional email with the company. Okay, so this standard requests that, okay, so if I'm going to work with a company, let us also have my own personal social media accounts and also the company's social media accounts. Okay, so that because we know that sometimes if you are using your own, so you can imagine that you are using your social media accounts and clients are also on your social media account. So if you post any information, the clients will see it. So, it becomes somehow kind of difficult to actually adhere to some of the requirements of this standard if your personal and your professional social media accounts is actually the same thing. Now, we have a standard, or so we have a guidance on whistleblowing. Okay, I believe we know what that thing means. That term whistleblowing, we know what it means. There was a time many people in Nigeria were blowing whistles, so I believe we know what that thing means.
Yeah,
I don't know whether
whistleblowing.
anyone,
Yeah.
yeah, whistleblowing. Whether anyone can remember the time they were saying, if you are to catch someone in money laundering and all those things, you can go ahead and blow the whistle. Somebody will say the compound, there is money locked in that compound and all those kind of things. Yeah, so this is one of those places whereby members and candidates are not, may actually be justified if they go contrary to their, to this duty of loyalty. Okay, whistleblowing. So the goal here is when we are trying to protect the capital market integrity, and also when we are trying to promote the client's interest. Okay, so if there are certain circumstances, so let's say the employer is engaged in an illegal or unethical activity. Okay, so in this kind of case, the member or candidate can actually go contrary to his duty of loyalty to that client, to the employer. Okay, so this is the case that you might have to probably, let's say, violate some of the policies and procedures that your employer have. Okay, you might even have to go contrary to any instruction that your employer have. Okay, and you might actually now keep. So remember, we said all these details or copies of the materials, whatever, is firm's property. So in this case, you can even keep a record of the company's property or whatever that you want to keep as an evidence. It might actually be justified. But please, I want to say something. If you are reading a question on this, the goal is that whenever you are doing this, that you are aiming, one, to protect the clients and also to uphold the integrity of the capital market. It shouldn't be for personal gain. So whenever you are reading a question, and from that question you can discern that the candidate or the charter holder was actually doing this whole thing, probably going against the employers and policies and procedures, violating instructions, preserving some of the records or whatever, going contrary to, this particular duty of loyalty to the employer. And the reason the person is doing it is for personal gain. It's the person is actually violating the standard. Okay. So the only two reasons that this is justified is that we are trying to protect clients' interest, and also you are trying to uphold the capital market integrity. So those are the only two justifiable reasons to go against these duties of loyalty. The final one under here is the nature of employment. Okay, so in fact this one is very, very important. Okay, so this standard applies to employees. Okay, it actually keenly applies to employees, but part of it, so we are going to talk about for independent contractors. Okay, so you can be an employee in a particular firm, you can also be an independent contractor. So we need to know who exactly you are to know the extent to which this standard actually applies to you. But mainly a standard applies to employees, but even for independent contractor, we are going to see how it applies to them. Now, how do we know whether you are an employee or an independent contractor? So normally, to judge that, we look at the degree of control exercised by the employing entity. Okay, so this is actually the key thing that we look like: the degree of control exercised by the what do they call them? The employment or the employer. So, for example, we can look at how many hours do you work. Okay, so obviously, if we have somebody that works, let's say 9 to 5 and something like that, we know that that one is an employee. Okay, so we look at the hours you work, we look at your work location. Okay, although right now, I remember when they were doing some of these things, all this working from home now wasn't really the key thing. So like those days, if you can easily choose your work location, we can say that you are an independent contractor. But right now, even employees can even be fully working from home, right? Yeah, and some other parameters that are being set. Okay, so who provides the work facilities and some of that thing. So the main thing is this. So you are looking at some of the information that determines the degree of control. So obviously, if the employer has a high level of control over the person, we can categorize that person as an employee. Okay. Otherwise, we can say that that person is an independent contractor. So for independent contractors mainly, if you're a member or you're a candidate, and we can say that you are an independent contractor, you need to follow the agreement between you and that client. Okay, so there is going to be an agreement between you and that client. So in that kind of case, those agreements are what you are to adhere with. So let's say the client says that, okay, so we have an agreement, you are to complete this job in 2 weeks' time under social condition and whatever. According to this standard, you are to adhere to that. Okay, so once the agreement has been set up, you are to adhere with it. Okay, so these are the things that we actually need to meet up to our duties to employer. Have anyone solved any of those questions from what we have done so far? Have anyone attempted?
So attempted what?
Okay, so there were some questions that if you open your learning ecosystem, there are some questions that are assigned to each of these standards. So like as we are done with loyalty right now, if you go to related questions in your learning ecosystem, you will see some questions. In fact, it's just only two. It's just only two.
Is it the curriculum you refer to now?
Yes, the curriculum, yes.
Yeah, I've started, but I've not gone. I mean,
Okay.
with the questions, yeah, but I've not gone. I can't say I've gone too far, but I've started.
Okay. How is it coming up?
Yeah. You know the way ethic is at times. At times, if you are not careful, you can mix some things up. So I think one thing about ethics is there are some keywords that you need to look out for when you are answering those questions. Because all the answers might look right, but as far as the standard is concerned, it's not right. So yeah, that's what I can say about that.
Okay, that's good. So I actually like what you said, right? Where you said, do you know the way ethics is, right? So apart from this lecture, so the goal is, that's why I keep on encouraging all of us that, the goal is that, so you attend the lectures, you rewatch the videos, and you make sure that you solve questions now, because questions solving is what makes you master these concepts, right? Because it's by the time you start solving questions, that is time some of these things that we are saying will actually start making sense to you. Okay, so but the good thing you will notice is that once you attend the lectures, by the time you are solving the questions, obviously there are certain things that will just totally be clear to you. Once you read, it can help you to spot obvious violations, and it can also help you to spot when someone is complying with the standard. Now, the more questions that you now solve case by case, remember, like we said, most of these things are case based. Okay, so they'll tell you about an individual, give you their scenario, and your job is now to decide whether this person violated the codes and standards. So question solving is key to math. So once you are done with the lectures, try to solve as many questions as possible. In fact, it helps in the consolidation process. Okay, it helps in the consolidation process. All right. So what about the recommended procedures? So remember, for each of these standards, there are recommended procedures. Okay. So sometimes you will notice that your employers will have some codes of conduct and operating performance. Okay. So your goal as a member or a candidate is to understand all these codes of conduct and operating procedures, and to comply with them. And you are also to make sure that these policies are not in conflict with the codes and standards. Because remember, as a CFA charter holder or CFA candidate, you are to comply with the codes and standard. Then again, if there are some of these policies that are not on ground, according to this standard, you are to encourage your employer to, adopt some of these policies. So one of them they noted is competition policy. Okay, so if your employer has any policy against you offering any similar service outside the firm, you are to understand these restrictions, how they actually work. Okay, So sometimes the policy might even require that you, have a process of requesting approval. So any of those things you have to understand how they work. And if there is any non-compete agreements, make sure you clarify. So your goal is to, make sure that you clearly understand this non-compete agreement before signing. So you don't end up signing something that can really affect you. And by the time you now notice some of the stipulations of the non-compete agreement, it will now be something that you can't reverse, maybe especially for a long time. So this standard says study any non-compete agreements before signing it. Then again, we have on termination policy. Okay, so if there is any maybe policy for resignation, make sure that you understand that. Okay, so make sure you understand how to notify the clients, also how to notify the staffs, and then if there is any process of transferring accounts, make sure that it's very, very clear. Then also, you also to encourage your employer to have incident reporting procedures. So these are simply procedures to report any unethical or illegal activities within the firm. And then finally, encourage your employer to have, employee classification. Okay, so this employee classification is something that can easily help a member or a candidate to understand their status within a firm. Okay, so remember when we are talking about the employee and the independent contractor. So most of what this standard says actually affects employees. Okay, but remember for an independent contractor, we said whatever agreements you have with the organization, you are also required to comply with the terms and conditions of such agreements. Okay, so firms are actually encouraged to adopt a standardized classification structure for their employees. Okay, so this actually brings an end to the, what do they call, the recommendation on this particular standard. Is there any question before we move to the next one?
No.
Okay, good. So let's move to the next standard. Okay, so the next standard we have is additional compensation arrangements. Additional compensation arrangements. So like we do, we are going to read what the standard says, and we are going to tell you some of the things that you need to do in order to be in compliance with this standard. So this standard says that members and candidates must not accept gifts, benefits, compensations, or consideration that competes with or might reasonably be expected to create a conflict of interest with the employer's interest unless they obtain written consent from all parties involved. Okay, so straightforward, as the name implies, additional compensation arrangement. So any other compensation that you are going to receive that can create conflict of interest with your employer's interest. I was trying to refresh this thing. Okay, good. Okay, so like I was saying, so if you are to accept any gift, benefit, or compensation that can compete with whatever your employer's interest, you are required according to this standard to obtain permission from your employer. Okay. Yes, this standard says that before going ahead, you have to obtain permission. Okay, so some of the guidance. So this actually encompasses any direct compensation or any indirect compensation. So when we talk about direct compensation, so maybe probably cash or whatever gift that you can receive directly. Okay, so indirect compensation might be favors and any of those kind of things. Okay, so probably the compensation might be to favor someone that you know, or to probably, let's say, make donation to a party or a cause that you support or whatever. So both direct compensation and indirect. Before you receive them, this standard says that you are to obtain permission from your employer. So any of those compensation that will create conflict of interest with your employer's interest, you are actually to obtain permission. So when they say written consent, it can, include any form of communication, like let's say an email or whatever. Okay. So actually, the goal of this, okay, the goal of this is to make sure that you don't go and accept any compensation or any benefits that would, affect your loyalty to your employer or affect your objectivity or even create a conflict of interest. So let me give you an example. So let's say we have, remember, if you remember when we were talking about the independence, loyalty, and independence and loyalty, we are talking about things like gifts from clients, which we said that those ones are not necessarily the issue, right? Gift from clients. But there are some other gifts from other entities that can actually make you to switch loyalty to those kind of entities. Okay, so those kind of gifts are the kind of gifts now that they are talking about here. Okay, so let's say you are let's say a research analyst. You're a research analyst, and probably let's say the company that you are currently researching wants to actually give you a gift or any compensation outside what your employer is giving you. So obviously, we know that that kind of gift can affect your objectivity. It can even affect your loyalty, right? So according to your employer standard, you actually to value and research the company and give a fair value of what the company is worth and give a fair recommendation, okay? But by the time you receive that compensation or that gift from that particular company that you are researching, it can actually, influence your loyalty such that you might even issue a recommendation that is not accurate or not fair. Okay, so that is why this standard says that any other additional compensation you are going to get in addition to what your employer gives you, any compensation that can conflict with your employer's interest, you are to disclose it. Now, if you are doing a part-time job, you should actually disclose the possible limitations on providing competitive services during the negotiation and hiring process. So let's say you do freelance. Let's say you are just a freelancer. Okay. So let's say, which example I give now? So you freelance. So you offer part-time services to corporations. And then probably when you got to a particular company and they are telling you that they wouldn't want you to, offer this kind of services to another organization or whatever. Okay. So in that kind of case, since it's a part-time arrangement, you have to actually discuss it with them during the negotiation process to tell them, okay, so this is actually what I do. So you are not paying me full time. You're just paying me for a part-time job. And you telling me that I'm not allowed to offer the services to someone else cannot actually work in this case. Okay. So if you really want me, that you really want to hold me and, not allow me to offer these services to someone else, then you have to pay me a full-time job. You have to pay me for my time, right? But if you're not going to pay me for my time, that means I should be allowed to also offer my services to someone else. So you actually have to negotiate all those things. During the hiring process. Okay. Because any agreements so once you now finally agree with that person, okay, so these are the terms and conditions, it becomes binding. I hope we're together.
Yeah.
Okay, good. Now this one is a very short one. So what about the recommendations? So basically, if, like we said, if there is any additional compensation arrangements that you are intending to receive, according to this standard, you are actually to promptly inform your supervisor and your compliance officer in writing before going ahead to, receive them. Okay. And that report should actually be confirmed by the party offering the compensation. Okay, so the informations that are required when you are trying to disclose about this compensation. So you need to talk about the nature of the compensation. You need to talk about the approximate amount and also the duration of the arrangement. Okay, so these are the things that you actually need to include when you are disclosing the the compensation, additional compensation. So you talk about the nature, the amount, and the duration. So these are the recommendations that you need to meet in order to be in compliance with the standard. All right, so let's move to the final one. So the final one is your responsibilities as a supervisor. So this one doesn't apply to all charter holders or members, but it only applies to people that have a supervisory responsibility. So if you're a supervisor, so probably you are among the senior officers in the firm, you have some junior ones that report to you. This standard actually affects you. Okay, so let's read what the standard says. So responsibility of supervisors. So this standard says that members and candidates must make reasonable efforts to ensure that anyone subject to their supervision or authority complies with applicable laws, rules, regulations, and the codes and standards. So if there is anyone that is subject to your supervision or authority, this standard says that you have to make sure that they comply with all the applicable laws, rules, regulations, including the codes and standards. Okay, so so whenever you have people under you, you have to make sure that their actions, okay, you have to make sure that their actions comply with the laws, regulations, and the codes and standards, right? Now, for you to really be effective to fulfill and comply with this standard, you actually have to have in-depth knowledge of the codes and standards, okay? So if you're in any supervisory role, your goal shouldn't just be to learn the ethics just to go and pass an exam. You actually also need to learn it to be able to fulfill your supervisory roles effectively. Now, you see, there are some times that you can actually delegate supervisory roles, okay? So let's say you are working in a big organization whereby we have, many number of persons under you, okay? So in that kind of case, it might be very difficult for the member or a candidate to, actually supervise everyone individually, okay? So according to this standard, you can actually delegate your supervisory roles to certain persons. But even if you are delegating, this doesn't still remove the responsibility from you. Okay? This still doesn't remove the responsibility from you. So you are still responsible to every person under you, including those persons to whom you actually delegated your supervisory roles to. I hope we're together.
Yeah.
Okay, yes. So that is actually what the standard actually said. Now, at minimum, so like this is the minimum thing required from you from this standard, you have to make reasonable efforts to prevent and detect any violation by establishing effective compliance system. Okay, so you have to have an effective compliance system. So the goal of this compliance system is actually to help us to prevent and detect violations of either laws, regulations, codes and standards, and also firm policy. So we need to have that compliance policy in place. And the compliance policy has to actually go beyond mere enactment of codes and policies. You have to include education and training. You also have to, include incentive structures. Okay, so there are some education and training programs that you are to encourage. So your compliance policy will actually, include those kind of things. Okay, so the goal of this education and training, which should be going on a recurring or a regular basis, is to ensure and train people so that people can actually, know what the codes and standards says, know what the laws and regulations says, and avoid violating them. Another thing is the incentive structure. So you are also encouraged to add certain incentive structures. Okay, so these incentive structures can actually, help to, so people that are complying with the codes and standard, you can, create an incentive structure that will reward good behavior. Okay, and also discourage bad behavior. Okay, so all these things can actually help you when you are performing your duties as a supervisor. Okay, yeah, so your incentive structure fee has to actually reward good behavior. Now, what if the firm or organization where you work, what if there is no adequate compliance system? What are you to do? Okay, so let's say we are working in a particular firm and the firm doesn't have an adequate compliance procedure. Now, the first thing you have to do is to notify the senior management about it. Okay, so you actually, as a member or a candidate, you should notify the senior management of the company about the inadequate compliance procedure. And you can actually go ahead and suggest to them some of the improvements that they can actually make in order to have an adequate compliance procedure. Now, there are certain cases that you might find it very difficult to fulfill your supervisory role because of the absence or inadequate compliance procedure. According to this standard, you have to decline any supervisory responsibility if that is the case. Okay, so if that is the case, you have to decline it in writing and tell them that you are not going to accept the supervisory responsibility until the organization establishes an adequate compliance procedure or adequate compliance procedure to enhance that everything functions. So this standard says whenever you come into an organization and they want to give you an adequate supervisory role, you have to look at their compliance procedure. If it's inadequate or it's absent, this standard says that you have to decline in writing, okay, and let the organization know that it's till when they come up with a compliance procedure or upgrade what they have, that is when you can actually resume your role as a supervisor. Okay, Okay, so when it comes to our system of supervision, okay, so these are some things that you have to make sure that are in place. So the compliance procedure has to be in place before a violation occurs. So it's not when the violation have occurred, we now gonna start setting. So remember, we have even said that before you even accept any supervisory role, make sure that the organization has a compliance procedure in place. If not, you are to decline it in writing. So the compliance procedure has to be in place before any violation occurs. And it actually has to design in such a way to anticipate these activities. Okay. So any activity that is likely to construct or be construed or even make somebody to violate, this actually has to be designed in such a way to anticipate those activities. And finally, it has to be appropriate given the organization size and nature. Okay, so different organizations will have different compliance procedures depending on their size and their nature. But overall, any compliance procedure any organization decides to adopt, we need to make sure that it meets minimum industry standards. Okay. Now, if you discover or suspect any violation, the goal or your goal as a supervisor is to act promptly. So you have to assess any wrongdoing and take any preventive action that you have to take depending the outcome of the investigation. Okay, so that's actually what is under. So let's say you might actually place some limits on the employee's activity, or you can even start increasing the monitoring on the employee's activity. So your goal in doing this thing is to make sure that the violation does not repeat itself, especially during that period of investigation. Okay? Yes. So just reporting the employer or just reporting the employee or just warning the employee might not necessarily be enough. So you might have to take some of these preventive measures like placing limits and increasing monitoring to make sure that those activities do not repeat themselves. I hope we're together. Is there any questions so far?
No.
Okay. Ethics is simple. I hope we agree with me.
So what do you say?
I said ethics is simple. Or
It looks simple, it looks practical, but I think it's technical. I think
so
it's
so in order
technical.
so in order to reduce the technicality, like we said, that is where solving question comes, right? So you have enough wisdom in your curriculum, whatever. So one of my strategies those days when I was studying my ethics for what I did then was I was highlighting my curriculum then, right? So I highlighted the key guidance in the curriculum. After highlighting them, I read them and then I moved over to question solving. And I noticed that the more I now kept on solving questions, going through what the standard requires, before I knew, ethics became one of those courses that you don't even have to sweat over. Okay, there are some courses that you don't necessarily need to sweat over, because once you enter the exam hall, everything would be clear. Okay, so ethics became one of those kind of readings for me. So that's also the thing I'm encouraging us to do. Okay, so as we are done, you do as many questions as possible. Trust me, by the time you keep on doing this, over time, these ethics of a thing, you just know that it's a course that I don't know how the exam is right now because of this online something now. I don't know whether you are allowed, that this is what I mean. I don't know whether you are allowed to, change like questions. During our own days when we are writing the exam, so if you open your question paper, we actually shade it. So if you open your question paper, they will tell you from so number. So if you're probably in the front page, you might see something like this. Ethics might be like from number 20 to 30. This course will be like from number this to this. So you don't necessarily need to answer the question sequentially. So like me, when I'm going to the exam, I already have courses that I call my favorite. So once I enter the exam hall, let's say ethics, if ethics is among my favorite, that means I'll look for ethics and answer from throughout ethics. When I'm done, I'll move to the next favorite. I'll just keep on answering like that. But I don't know. Right now that is what do they call it? Online. I don't know if they allow students that kind of option, or whether the whole questions will be coming sequentially. I don't know yet, but still, regardless, ethics is one of those courses that would actually save so much time in the exam hall. You don't necessarily need to waste time. If you follow what we are doing here and you go ahead to solve enough questions, you will notice that it gets to a point by the time you are, in fact, it's as if you can sense or even smell violation, right? Yes. By the time you are reading the question already, you are even just seeing the standard the person violated. But it doesn't just happen, right? You have to study, attend the lectures and do the practice questions. So if you do those three things, it can really be so impactful that even you'll be surprised. And remember, like we drummed this and we keep on drumming it, ethics is basically the same thing, level 1, level 2, level 3. So by the time you still get to level 2, you notice that like 80 to 90% of what we have done in level 1 is still the same thing you are doing in level 2, and in level 3 is still the same thing, right? So that is why you really need to have a very, very good foundation on this now, so that when you go to level 2 and level 3, you will just be practicing. Now, the final thing we have under the standards is the supervision. So it actually includes detention. I think we have mentioned it. Okay. So if you have any supervisory responsibility, you have to make reasonable efforts to even. So it's not only about preventing. You also are required to detect. Right. Yes, you have to also dictate. So setting up the procedures might not just be sufficient. You have to make sure that any procedure that you set up for the people under you, you have to make sure that those procedures are actually being followed. And if there is any violation, you have to make sure that those violations are promptly addressed. Okay. Now, there are some times that, so you have already made sure that the compliance procedure is effective. You have taken those steps. After doing that, okay, a violation still happens, okay? So if that is the case, you might not necessarily be considered to be in violation in this standard. After that you have done your own part and made sure that the company has an effective compliance procedure, and in the end, someone still, violated and you didn't detect the violation, that would not necessarily be a violation of this standard, okay? But it can actually suggest to you that that compliance procedure is actually inadequate, okay? Yes. Now, the final thing we have is that you can actually be considered to be in violation of this standard if you know or should have known that the compliance procedures were not actually being followed. So, like we said earlier on, it's not just about setting the compliance procedure, it's also to ensuring that the people under you are adhering to them, okay? So, if the people are not adhering to them and you should have known, okay, that the people are not adhering to them, then you can also be considered in violation of this standard. Is there any question? So this is the final thing we have under, what do they call it? Under duty. So let's talk about the recommendations. So basically, you are actually encouraged as a CFA charter holder or member to recommend to your employer to adopt a code of ethics. Okay? So we know that if you have a code of ethics, it actually can enhance and help the organization have a strong ethical foundation. Okay, so you have to encourage your employer to adopt it. Okay, now if there is any standalone code of ethics, you have to make sure that it's written plainly. Okay, so we don't need to put so much details. Okay, so if you notice the CFA code of ethics, there are just only 6 things there. Okay, just 6 things that you have to do. So the same thing, that's what they're encouraging you. Now, they now have the standards of professional conduct, which is actually, where we are spending most of those times for. Okay, so the goal here is to, present the code of ethics in a way that can show the clients that, we are acting in their best interest. Okay. Then finally, you should also encourage your employer to provide this code of ethics to the clients. Okay. So the goal of this thing is to enhance them, transparency and all those kind of things. I hope we are together.
Yes, we are. We are.
Okay. Okay, good. So this is where the duties to employer ends. So we just have 3 more to go. Okay. So we have 3 more to go. Let's move to the next one. Okay. Oh, I think oh, okay, sorry. I didn't even notice. Okay. We still have some, more recommendations. Okay, we still have some more recommendations. Okay. So still under the recommendation, the members and candidates should also so if you're still a supervisor, in order to adhere, we have said that you should make sure that the company have an adequate compliance procedure. Okay, so the compliance procedure should be clearly written, easy to understand, and also tailored to the firm's operation. I think we have actually talked about something like this. Okay, so sometimes in order to also adhere, we can have a compliance officer with defined authority and resources. Okay, so this compliance officer can actually help us with compliance. Okay, then again, we should also describe supervision or supervision hierarchy, checks and balances by monitoring procedures and perceivable conduct, then reporting to some of these things are very obvious. So you should also have this. Then again, there should be regular update procedures. Okay. Okay, so I was talking about the adequate compliance procedure. Okay, so I was saying that so if you're a supervisor, you have to actually identify any situation in which a violation is likely to occur, and your goal is to make sure that you enforce the compliance procedures to prevent such violations. So we actually discussed about this before, okay? And you have to make sure that you have a compliance procedure that is clearly written, okay? And also easy to understand and tailored to your firm's operation, okay? So that is your goal. And you might have to get a compliance officer with authority and resources. So that's also another thing. Then again, let's have a hierarchy. Okay, so we need to have a hierarchy, a system of checks and balances, also, and also a system of monitoring procedures, presumable conduct and reporting violations. So make sure that you have some of these things in place. And you also have to regularly update your procedures, educate your personnel. I believe we actually talked about the education thing, okay? And also incorporate the compliance into performance reviews. And then finally here, you also have to respond promptly to violations. So remember what we said about violations. So whenever there is a violation, your goal as a supervisor is to respond promptly, and you have to conduct investigations to, of any activities to determine the scope of wrongdoing, and you have to increase supervision and place appropriate limitations on the wrongdoer pending the outcome of such investigation. And like we said earlier on, you need to review the procedures for potential changes, okay, to prevent any of those future violations, okay? So those are some of the things that we need to do to make sure that we have adequate compliance procedures. Then we talked about this issue of education. So there has to be a continuous education and training. So the goal is actually to, strengthen our compliance or culture of integrity. Okay. So let's have that education whereby we educate our trainees or people under us. Okay. So this education can actually help them to recognize ethical and also legal pitfalls. Okay, and once they recognize them, it can help them to make more sound ethical judgment. Okay, so the goal is to, link ethical conduct with the long-term business success. So that is the goal here. Finally, when it comes to appropriate incentive structure, so let's make sure that the corporate culture reinforces ethical behavior over succeed at all cost mentality. Okay, so the goal should be to reinforce ethical behavior, not just to succeed. So there are certain things the organization might set up, and those kind of incentive structures might actually make individuals in those organizations to focus more at succeeding regardless of what happens. So make sure you don't have those kind of things. So your goal when setting your incentive structure is to make sure that those fee structures, prioritizes the client's interests. Okay, so that is should be the goal. So you have to tie compensation to ethical behavior. I believe we have actually discussed this thing before. So your compensation structure to actually promote, good behavior. Okay, so this is where the standard on duties to employers actually ended. So we are going to move to the next one, which is investment action, recommendation, and analysis. So this is actually the next standard we are going to deal with. So this is basically like the fifth standard, the fifth standard. So far so good. Do we have any question on this duties to employer? We have any question at all from anyone? Is there
For me,
anything you
I
don't
don't.
understand? Okay, good, good, good. So those are some of the things that you have to do in order for your duties to your employers being good. So now we are going to move to the standard 5. Remember, we said we have 7 of them. So we are done with 4 now. We just have 3 more to go. Okay. So let's move to the next one, investment analysis, recommendation, and action. So under this one, we'll still have like 3 baby standards, and we are going to look at what each of these standards states. So remember, so basically, when it comes to our investment action, basically, which is just performing our duties, our investment duties, professional duties. So these are some of the things that apply. So the first one is diligence and reasonable basis. So let's read what it says. So this one says that members and candidates must exercise diligence, independence, and thoroughness in analyzing investments, making investment recommendations, and taking investment actions. So this is the first thing. And the second thing is that the members and candidates must have a reasonable and adequate basis supported by appropriate research and investigation for any investment analysis, recommendation, and action. So this is actually what the standard says. So what we are going to do here is to now look at some of the things that you have to do in order to be in compliance with what the standard says. So the thing here is diligence and reasonable basis. Okay. Now, first of all, before we look at some of the things that you have to do to be in compliance with this standard, let's see, how this standard actually applies. Okay. So before we know the nature of diligence and thoroughness required from you as a member or a candidate, first of all, we need to actually look at some 3 key things. Okay. So the first one, the investment philosophy of the member, candidate, or the firm. That is the first thing that we need to consider before we know the level to which the standard applies to you. Other one is your role in the investment decision-making process. Okay, so that will also affect the level or the degree to which the standard applies. And finally, the support and the resources provided from your employer. Okay, so these are like 3 things that or 3 factors that would affect the level to which this standard applies to you. All right, so let's try to define diligence and reasonable basis. Let's have a definition first. Now, before we define, first of all, you need to note that every investment decision you are going to make is based on the facts it's based on the facts known and understood at that particular point in time. So nobody expects you to know what is going to happen in the future. So it's based on what we actually have currently and what we understood currently. That will depend on the investment decision we are going to make. And normally we know that clients typically come to the what do they call, the advisor or the investment manager, expecting that you have more knowledge and that you have more information than they actually do. So that is actually why clients come. Okay, so the information and the knowledge is the basis to which this particular standard applies. So one key thing you need to notice is that the level of research and analysis required according to this standard varies based on specific products, security, or services being offered. So it's not like a one line to say that you must do this and you must do that and you mustn't do this and you mustn't do that. It depends on some of these factors that we have actually mentioned. Okay. Now, so you notice that if you're an analyst, a research analyst, or you are working in a particular company, there are many resources available to you. So we can have access to the company's report, a third-party research, and any other quantitative model. So sometimes all you need to do is to go through all these resources, and based on all these resources, you can actually make a decision. Okay, you can make an investment decision. Okay, so you look at this report and make an investment decision. Now, what key thing you need to notice is, so no matter how well informed your recommendations are, there can still be downside risk. No matter how well informed your recommendations are, there are still some possibilities of downside risk. Because like we said, and we are repeating it now, every investment decision you are going to take is based on the facts that you know at that time. Okay, so no matter how careful your recommendation, so you have actually sniffed through all these what do they call them, resources, like third-party research, company report, quantitative method, and all of whatever. Okay, there are still some of the downside risk that can actually happen. Now, let's talk about how this standard applies to using secondary or third-party research. Okay, so sometimes as a member a candidate, you can actually rely on a secondary or a third-party research. That's a research conducted by someone else. Okay, now your goal is to make sure that if you are going to use a third-party research or a secondary research, you must make sure that the person or the research has a reasonable and a diligent basis. Okay, so basically, you must make sure that that research is sound before you go ahead to use it. So one way to make sure that that research is sound is that you can make some inquiry into the data source used in the research, or even the accuracy of the data used in the report. So these are some of the things that you can actually do to make sure that the research is sound. Okay. I hope we're together. I hope everyone can hear me.
Yes, I can hear you.
Okay, good. All right. So some of the criteria to evaluating research include assumptions. So if I want to use a particular research, I can actually look at the assumptions that we are used in coming up with the recommendation or whatever. I can also look at the rigor of the analysis that was performed for the research. I can also look at the dates or the timeliness of the research. So we know that you can't compare a research published today and a research published next 1 month, right? Because the one published today is based on what was known as of today. But the one published 1 month from now will be based on what is also known as at that time, right? Yeah, so we need to also look at the timeliness and the dates of the research to know how relevant the research is, and to know whether we can soundly use that research to, make a decision. Okay. And also we need to evaluate the independence and objectivity of those recommendations to make sure that those recommendations are not biased by whoever did the research. Now, there are some times probably if you want to use a third party, a secondary research, it might happen that you don't, as a member or candidate, have that time to go through this research report on your own. Okay, so this particular case, you might actually rely on any other person in your firm to check the quality of this research report for you. Okay, so you can rely on somebody to, so the person in the firm can go through the research report and tell you that based on the analysis of the research report, that the research report is of a high quality and it has a diligent and a reasonable basis for its conclusion. In that kind of case, you can actually use the information without being in violation of the standard. So in summary, what this is trying to say is that it's not must that you have to evaluate the secondary research report yourself before actually going ahead to use it. Now, the next one is on using quantitatively oriented research. Quantitatively oriented research. Okay, so if we are going to use any quantitatively oriented research, this standard requires that you, the member or candidate, have to have understanding of all the parameters in the model. Okay, yes, you need to note and know all the whole parameters in the model before you can go ahead to use the model. Now, there is one key point you need to note here. So, this standard does not require the member or a candidate to be an expert in every technical aspect about the model that they are going to use. Okay, so nobody requires it. So let's say somebody brought out a model that can forecast returns on a particular security, or a model that can predict returns on a particular security. Your job as a member or a candidate is not really to understand all the whole technical aspects of the model, but there are three important things that this standard requires that you must actually understand before going ahead to use the model. So one of them is the assumption of the model. So like, I believe when you are doing your ethics, when they talked about a model like Godon's growth model, the next thing you will see being discussed is the assumptions of the Godon's growth model. So if you are going to use any model, the member or a candidate needs to make sure that they understand the assumption. Another thing they need to make sure that they understand are the limitations of the model. So if there is any limitations of the model, you also notice it that sometimes whenever you see some of these models, the person that created the model will go ahead to tell you that, okay, so let's say, for example, if you are using the regression model, if you are using the, what do they call it, the coloration model, okay, the regression model and all those kind of things. For example, when they say coloration model, they will tell you that coloration measures only the strength of linear relationships. So automatically that tells you that if you are interested to measure the strength of nonlinear relationship, coloration model is not for you. Okay, so the same thing applies to you as an analyst. Okay, so if you are going to use any quantitatively oriented research, make sure that you understand all the limitations of the model. Okay, and the final thing that you need to understand is how the results were used in the decision-making process. So whichever results you get from the model, you are also required to know how you can use those results in a decision-making process. I hope we are together.
Yes, please.
The next thing you also need to do is to make reasonable efforts to test the output of the investment model. Okay, so before you go ahead and start using any model, you are required, according to this standard, to go ahead to test it. So by the time you start reading questions on this, these are some of the things that you will notice being tested on the question. So remember, a candidate just got a model and they didn't test the model. They went ahead to go and use it. They don't understand the assumptions, the limitations, all these things would be a violation. So you are required, according to this standard, that for every model you want to use, make sure you understand the assumptions, the limitations, and also how to use the results you got from those models for decision making. And like we said again, you have to test the output of the model before using them. Now, there is one thing, I think I have seen a question that actually, tests this thing, okay? So whenever you are going to test a model, you need to test that model, encompassing a broad range of assumptions, okay? So the key thing is to try many scenarios. So the curriculum, in fact, it is recommended that if you are going to test some of these diverse scenarios, you are to try to include positive and negative scenarios. So don't do a one-sided scenario testing, right? don't do a one-sided scenario testing. You can actually, the best thing is to, try to include positive and, extremely positive and extremely negative, so that you can actually see exactly how this model works. So that it doesn't be that this model works in only, one side of the equation. We need a model that can, be able to perform regardless of the scenario that is actually playing. So that's why we need to, include extremely positive and negative scenarios. Now, what we did now is for people that use quantitatively research model. Now, what about the persons that develop? So remember, if you are a user, your goal must be to understand the model, the assumption, limitation, and how to use the results to make a decision. You have to also test it. And so these are your core duty. What about if you are among those that develop? If you're among, remember we said if you're among those that use, you are not required to know the whole technical details of the model. But if you are among the developers, according to this standard, you must actually know all the whole technical aspects of that product. Okay. And you must also thoroughly test the model and the resulting analysis before distributing the model. So for developers, you need to know all the whole technical details. But for users, you are not required to know all the whole technical details. Okay. Now, the data sources and time horizon must actually be carefully understood if you are going to, be developing the quantitatively oriented techniques. Okay, so any assumption or model record should actually be reviewed for accuracy. And like we said in the other one, if you're a user, when you are also testing, try to incorporate a wide range of expectations. So let's not just focus on the positive side. Let's focus on the negative side too. Okay. So what if things turn bad? Because you might notice that probably when someone comes up with a model, so the person is telling, this model is working, and it might be that that model is working for only one kind of market condition. Okay, so probably this model works when the market trends up, but when the market is, in state of, what do they call this case where the market moves up and down like that? So if that is also the case, you might notice that the model might fail. So in a ranging market, the model can actually be failing, but in a trending market, the model can do well. So your goal is to make sure you try to, not just focus only on one kind of strategy or on one kind of market condition. Try to, test this model even during negative market events to see how the model can, perform, so that you can give a better, description of the model's performance. The final thing we have here has to do with, before that one, we have, there's another one we have. So when it comes to selecting external advisors and sub-advisors, there are also some of the things that you have to do. So we have finished talking about when it comes to selecting investments, making investment decision. We have also talked about when it comes to using quantitative research models. Now we are now discussing how to perform when it comes to selecting external advisors and supervisors. So when it comes to selecting external advisors and supervisors, you are also required as a member or a candidate to review the individual funds and securities. Okay, so you have to review them diligently, one after the other. Okay, so if you are going to use any external advisor, there are some things you need to review before selecting a manager. Okay, so one of them is to review the advisor's established code of ethics. So that is the first starting point. Okay, so do they have a good code of ethics? If they have, then there is a high chance that the advisor or the sub-advisor is good. Another thing you need to do is to understand the advisor's compliance and internal control policies. Okay, so this can also help you to select a good advisor. Then again, you need to assess the quality of the published returns. Okay, so what is the published returns? What is their quality? That's also another thing. And finally, you need to review the advisor's investment process and then the adherence to their stated strategy. So, do this advisor, do they adhere to their strategy? Okay, so how is their process like? So these are some of the things that can actually guide you to select good advisors. Then finally, we have a case when it comes to group research and decision making. So, let me give you an example. So sometimes if you're a member or you're a candidate, you might actually be a part of a group or a team, okay? So that team might be responsible for producing investment analysis and research, okay? So it can actually happen that you are in that kind of team. Now, if you are in any kind of team that is responsible for producing investment analysis or research, there are some things that you need to know. First of all, you need to know that any group conclusion represents consensus, not necessarily your own individual views. Okay, so if the group comes up and says that this is what we have researched is security and this is our recommendation on this security, you might have an opinion that is contrary to what the group is saying, but just know that whatever conclusion the group comes up is simply a consensus. Okay. Now, if that particular consensus opinion does not reflect your opinion, this standard does not require you to disassociate. If the group has a reasonable and adequate basis, and also their research is independent and objective, you don't necessarily need to disassociate. Okay. So you only need to disassociate when probably the group has, so there is no independence and objectivity, and there is no reasonable and adequate basis. Okay, so that is the case whereby you might want to remove your name from the report. But so far as whatever the group comes up with has a reasonable and adequate basis, and the report is independent and objective, even if you don't agree with their recommendation, this standard says that you don't need to, disassociate from it. Then there are some recommended procedures for us to be in compliance with this standard. So one of them is that you should actually encourage your firm to set some policies and procedures that can actually help you, the member or the candidate, to be in compliance with this standard. So let's look at some of those kind of things that you can let your firm to do. So one of them is that you should actually, encourage your firm to have a policy requiring that research reports, credit rating, and investment, what do they call them, recommendation, do have a basis that can be substantiated as reasonable and adequate. Okay, so the firm can actually go ahead to appoint a supervisory analyst. Okay, so the goal of this supervisory analyst is to review and approve, some of those items before circulation before external circulation. Another thing is that, you are also to encourage your firm to provide detailed written guidance for analyst supervisors and also the review committee to establish due diligence and procedures. The third thing you can also do, according to the recommendation here, is that you should also encourage your firm to, have a measurable criteria for assessing the quality of research, basis of recommendation, and accuracy of recommendation over time. So, like we said before, you can actually consider having a compensation arrangement tied to these criteria. Some other things that you can do. So if we are doing scenario testing, if we are going to be doing scenario testing of computer-based model, I believe we know what scenario testing is all about.
Yeah.
Okay, good. Okay, good. So if you are going to be running scenario testing on computer models, okay, so according to this standard, we need to have a written guidance for this scenario testing, okay, so that we can calculate the breadth of scenarios, accuracy over time, and also do our sensitivity analysis. Then when it comes to outside managers, we need to actually have a measurable criteria so we need to have some measurable criteria to assess these outside providers. Okay, so that can include assessing the quality of information they are providing, the reasonableness or the adequacy of the provider's collection practices, and also the accuracy of information over time. And finally, we need to adopt a standardized criteria for evaluating external advisors. So these are some of the recommendations that we need to, carry out in order to be in adherence to this standard. I hope we are together. Okay, so let's move to the next standard. So we're actually done with the first standard under investment analysis, recommendations, and action. So we have the next one. So this is the one that has to do with communication with clients and prospective clients. Okay, so this particular standard is actually long, and in fact, essentially, it almost has even said it all. So let's read what the standard says. So the standard says that members and candidates must disclose to clients and prospective clients the basic formats and general principles of the investment processes they use to analyze investments, select securities, and construct portfolios, and must promptly disclose any changes that might materially affect those processes. So basically, this is saying that the basic format and general principles that you use in your investment processes, that you should disclose it to your clients, and then if it changes, if there is any if there is any change that might materially affect them, that you should also disclose them. The next one says that you should disclose to clients and prospective clients significant limitations and risk associated with the investment processes. So any significant limitations and risk, you are also to disclose it according to the standard. Then again, you are to use reasonable judgment in identifying which factors are important to the investment analysis, recommendations, and actions. And then you are to include these factors in the communication with clients and prospective clients. And finally, you are to distinguish between facts and opinion whenever you are making investment presentation of investment analysis and recommendation. So these are what you are meant to do whenever you are communicating with your clients and prospective clients. Okay, so let's see some of the extra things that we have in this standard. Like I said, this is kind of long, and whatever you see here, the standard has actually summarized all the things that are required for you to be in compliance. Okay, so according to this standard, there should be clear, frequent, and thorough communication practices for financial service providers. So, whenever you are a financial service provider, you have to clearly, frequently, and thoroughly communicate with your clients. So that is the first thing that you should actually note to this standard. So communication should actually include any factor instrumental in the investment recommendation. And like we said, whenever you are making those communications, you have to actually distinguish between facts and opinions. So this other one, we actually said it when we are reading. So if there is any basic, characteristics of securities analyzed, you should also communicate it so that, the people that are going to use that then will make more informed decisions. And also, if there is any significant changes in risk, you should also make a follow-up communication. So these are some of the things. Now, let's see when it comes to, disclosing or informing the investors about the investment processes, what you need to do. So like we said, when we are reading the guidance, if you are going to describe the investment decision processes, you should actually talk about and address positive and negative factors that are going to influence the recommendations, okay? So like we said, this can also help the clients to, make a better informed decision. And like we have said earlier on, if there is any significant risk and limitation, or if there is any newly identified risk and limitation, according to this standard, you are also to disclose it. Then, according to this standard too, if you are going to be using any, what do they call it, specialization or any diversification expertise provided by external advisors, you are also to disclose it. So what the standard is basically just saying is that you should have a kind of open communication with your client. All the necessary information and details that you need to communicate with your client, according to the standard, you are to make such communications available to the clients. Now, according to this standard, we noted there are different forms of communication. So when we are talking communication here, we're not necessarily just talking about written reports, which is basically like the traditional kind of communication research analysts normally generate when they research a security, a company, or even an industry. Okay, so we are not limiting this to a written communication. So when we are talking about communication here, it can be in person, it can be telephone, it can be media broadcast, it can even be transmission by computer, like example on the internet. So all these things are communication. Now, if according to this standard, you are going to be using new technology, this standard still says that you should make sure that you deal fairly with all the whole clients. I don't know, but there was a standard we discussed under duties to clients where we talked about fair dealings. If you remember, in fair dealing, I think we also talked about this technology thing, okay? So whenever you're using any technology, make sure you deal fairly with all the clients. So like this is one of those standards, like I told us that if you violate one, you violate two. So if you didn't deal fairly with the clients when you are communicating with new technology, you'll be violating both communication with clients and prospective clients, and you also be violating fair dealing. Okay, so yes. So if you are going to use any new technology at all to communicate, make sure that all the whole clients are treated fairly. Okay. Now there are some times whereby you might actually just issue a one-word recommendation. Okay. So the one word might just be to tell clients buy. That is just what you are communicating to the client, or to just tell the client sell. There might be other times whereby you might issue reports that might have even more than 100 pages. Okay. All those things are allowed according to this standard. Okay. But if for any case you issued a research report that is in capsule form, okay, you should also notify the clients that additional information analyses are available from you. Okay, that's also what this standard requires. So you can actually issue a capsule like buy or sell or a lengthy recommendation, but just make sure that if you are issuing a very short report, let your clients know that they can have access to additional information. What about risk and limitation? So I think we have actually talked about, I told you like this standard is kind of long in terms of what it says, and it is actually disclosed and told you all the necessary things you need to do. So remember, it says that if there is any risk or limitation that is significant, you must actually disclose those risk and limitation. So some examples of the risk denoted in the curriculum things like use of leverage. So we know that leverage creates risk. So debt, if I'm going to use debt to try to boost my return on equity, that actually creates risk. So you should notify your clients that you use leverage. If there are other general market risks, so like exchange rate risk, equity market risk, commodity risk, interest rate risk, all those kind of risk, you should also disclose it. Okay. Then again, risk associated with compressed financial institution instruments. So if I'm going to be using like a security like derivatives, that kind of security have some risk associated with it. So you actually need to disclose it. If there is any counterparty risk, so that's the risk of one party defaulting in the transaction, you disclose it. Country risk, sector and industry risk, security specific risk, credit risk, etc. So any risk at all that you know that is significant that can actually impact your clients, this standard says that you should disclose it. What about limitations? So if there are any investment liquidity limitations or capacity limitations, you should also disclose it according to this standard. Okay. And the key thing you need to know is this. So the appropriateness of your disclosure is normally assessed on the basis of what is known as at that time. Okay. So nobody expects you to disclose what you don't know. It's only based on what the member or candidate knows as at that time. That is the thing that you can actually disclose. Now, when it comes to reporting presentation, okay, if you are going to do any presentation for your clients or your prospective clients, make sure you include all the important elements that are going to support your analysis and conclusion. Okay, you have to actually make sure you include all those things in your reports that you are going to make to your clients. I hope we are together. I hope everyone can hear me.
Yes, I can hear you.
Okay, good. So make sure that whenever you have those kind of reports or analysis that you want to present to your clients, make sure that you add all the whole elements that are important in the analysis and conclusion, so that the readers of that report can actually follow and challenge your line of reasoning. Okay, yes, that is actually what you want to do. Then again, for investment based on quantitative advices, you have to make sure that they are supported by readily available reference materials. Okay. Yes. So that is it. Then we have a statement of facts and opinion. I think we have actually stressed on this one. So make sure you separate facts from opinion. Probably when you be solving questions, you might actually see some questions on this. So make sure that you separate fact from opinion. So let me give you an example of this. Okay. So if, for example, there is last year, if last year I generated a return of 10% for a client or for my client, that is a fact. It can actually be verified, right? It's a fact. Okay. But if a client comes and I'm saying that, and I'm telling the client, I'm talking about the future, which that there are many things about the future that makes it so nobody knows the return that can be obtained next year, and based on whichever variables or many of those circumstances. So, if I want to make projection, I have to make it known to the client that what I'm saying, so especially when you are talking about the future, okay, you are making projections. So I can tell my client that there are chances that we can generate certain return based on what happened in the fact. You have to state it in such a way that the client knows that what you are stating, it's not a fact. Okay, you are stating. So I can make a projection of earnings, saying that earnings can get to 10 million naira next year, can get to 100 million naira next year. Okay, there can be changes in outlook of policy or whatever. So we are predicting now so thing can happen next year. So make it known that it's an opinion, not a fact, because these opinions are actually subject to circumstances. Okay. Now, if we are doing a complex quantitative analysis, you also have to, clearly state, separate facts from statistical conjectures. Okay. Yes. And if there is any limitation of those analyses, it also has to be clear. Okay. And then finally, if you are using models, make sure that you disclose all the whole assumptions that were used in the model. Okay. And then you don't go ahead to start promoting the accuracy of models, because remember, models just give us estimates. So I can have a model and the model is actually giving a good estimate, but by the time you apply it in real life, it might not really, be performing as it was actually performing. Okay, so make sure you note some of these things when you are communicating. Now, when it comes to recommended procedures, okay, so we need to assess the reasonable judgment. So it's going to be like case by case review. Remember, there were some things we talked about when we are communicating. So you have to know the necessary things you need to communicate and communicate. So when we are trying to evaluate whether someone violated the standard or complied, it has to be case by case review, not really a checklist. So this is one of those parts whereby you need to solve as many questions as possible to be able to know when someone is violating the standard. Okay. You should also encourage your firm to have a rigorous methodology for reviewing research for intended publication. And finally, you must maintain records indicating the nature of research for after the fact review. Okay? So they should be prepared to provide additional information. So like we said, this one. So if clients request additional information, you should be able to give clients those kind of information so that it can actually enable them to actually follow your line of thought. Okay, so these are some of the recommendations that are required in order to be in compliance with this standard. I hope we are together. Is there any question on what we have discussed so far? I hope I'm not too fast.
No. I don't have any question either.
Okay, good. Okay, good. That means we have really gone so far. Okay, so basically we have the final one under this, so which is record retention. So okay, we're on track. All right, so let's look at record retention. So this one is basically saying that for any investment analysis recommendation or actions that you take, you need to develop and maintain an appropriate record to support it. Okay, so yeah, so if you are going to recommend any security or take any investment action, you need to make sure that there are records to support or documents to support whatever action you decide to take. Okay, so simply let's read what the standard says. It says that members and candidates must develop and maintain appropriate records to support their investment analysis, recommendations, actions, and other investment-related communications with clients and then prospective clients. Okay, so any action, recommendation, analysis they are taking, make sure that you have some records, you retain some records that can validate that. Okay, that is one thing that you need to do according to this standard. Okay, so the retention applies whether you are recommending people to buy the security, you are recommending people to sell the security, and all those things. It actually applies. Okay, now you need to note that this retention or record retention requirement actually will depend on your role in the investment decision process. Okay, so depending on what you are doing, that will actually depend on whether this particular standard applies. But if you are going to take any action at all, or you are going to recommend, or you are doing analysis, this standard says make sure you keep something that substantiates that. Okay. Now, sometimes you might actually have your records in hard copy or electronic copy, but the main thing is have a record. So these are some examples of supporting documents. Okay, so maybe personal meeting notes with covered company is a supporting document. If there is any press release or presentation by covered company, is a document. Computer-based models, document, client meeting notes to review investment policy statements, outside research reports. All these things are just an example. This list is not comprehensive, or there can be more. Okay. But the main thing is that these are some documents that can actually support whatever you are doing. Okay. Now, because of the advent of social media and some of the new technological formats, okay, it can actually create challenge for us when it comes to maintaining, records. But still note, no matter what is happening, no matter the change in technology or new tech or whatever, it doesn't still exempt you from the record keeping responsibility. So no matter the technology, this standard says make sure that if you are going to take any investment action, make a recommendation or analysis, make sure you have a document or something to support that. Now, so this standard still talks about that same thing that happened or when we're talking about our employees. So make sure you note this, always note this. So any record at all you created when you are working in any particular firm is actually a property of that firm. So let's say a particular analyst was serving in a particular firm, and in that firm he developed a research report. Okay, that research report he developed is the firm's property. So if that analyst leaves that firm, you are not required to take that property. Remember, when we are talking about duty of loyalty, we said before you can take such property, you must take permission from that your old employer. Okay. So if you don't take that permission and live with that property, you will be in violation of loyalty to your employer. Okay. And according to the standard on record retention, you can't even take that property and use it, okay? Because it's still the same thing. You'll be in violation of your loyalty to your employer, okay? So what are you going to do? If you move to a new firm, and let me give an example. So let's say that a particular analyst was, working in an investment bank, and he's a sell side analyst, and he recommended that people should buy, let's say, Konoyu shares. That's his recommendation. Okay. Now, if he goes to a new firm, he can't just now say that, tell the clients in the new firm that they should go ahead and buy Konoyu firm shares. Why? There is no historical, there is no documentation that supports that recommendation. So he's not allowed to do that. If he does that, that will be a violation of this standard. Okay, so you can't actually use a historical recommendation without supporting documentation. That's what the standard says. If you try to do that, like if he now goes to the new client and tells the new client, so when I was in my old firm, we have a bad recommendation on Konoyu. So because of that, I'm recommending you to go and buy Konoyu. That will be a violation. Before he can make that, he has to, have some supporting documents. So if he wants to do that, what he can do is to, create or recreate the supporting documents at the new firm. Okay. So in simply what we are saying is that you can't from your memory or from the sources that you just, so maybe you can't from your memory say go and buy or don't go and buy. Okay. The only thing you have to do is that you have to recreate. Okay. So yes, you can actually recreate it from some informations that you can get analysis. So based on this information, I'm recommending you to buy or not buy. Now, the final thing under the record retention is this. So sometimes regulators would impose a record retention requirement. So if they do that, you must actually follow them. Okay. So let's say the government of your country says that you are to keep record for certain years. You are to follow it. Okay. Then the organization or the firm where you work might also have their own record retention policy. If they also have, you are required to adhere. Okay. But if we have a situation where the country where you stay, the government doesn't have any record retention policy, and the firm doesn't have also a record retention policy, the CFA Institute recommends that you should maintain your records for at least 7 years. At least 7 years. That is what they say. Maybe when you are solving question, maybe you might encounter this number. So make sure you note the number 7 years. That is what the CFA Institute recommends. Okay. Then what about the recommendations? So when it comes to recommendations, we know that the primary responsibility for maintaining records actually lies with the firm rather than individual employees. But still, make sure that if you're a member or a candidate and you are, doing investment analysis, issuing recommendation or taking investment action, make sure that you archive any research notes or related documents, okay, that supports that investment related communication. Okay. So with this, we have actually completed the standard 5, which is on investment analysis, recommendations, and actions. I hope we are together. Is there any question before we move to the next one? Because we are moving to the 6 standards. So basically now, we just have 2 standards to go, and we should be done with this. Do we have any question?
I don't have question. I actually don't have question.
Okay. Okay. So let's go on. So we are moving to standard 6, which is second to the last standard. Okay. So the first thing we have is so the standard is on disclosure, conflict of interest. Conflict of interest. And the first thing we have is that if there is any conflict of interest, you have to disclose. So let's read what the standard says. So the standard says that it says that members and candidates must make full and fair disclosure of all matters that could reasonably be expected to impair their independence and objectivity or interfere with their respective duties to their clients, prospective clients, and employer. So if there is any any matter at all that can be expected to impair your independence and objectivity and interfere with your duties to your clients, prospective clients, and your employer, this standard says that you should disclose them. Okay. And such disclosures are so you must make sure that such disclosures are prominent and are delivered in plain language, and communicate the relevant information effectively. So this is actually disclosure. So whenever there is any conflict of interest or anything that can interfere with your independence and objectivity, you are, according to this standard, to disclose it to your clients, employers, or your prospective clients. That's what the standard says. So there are some times that this conflict of interest can arise, but if you can avoid any conflict of interest or even their appearance, this standard says that please, you should actually go ahead and to avoid them. Some of the common sources of conflict of interest might be the compensation structure. Okay, so especially when it comes to bonus structures and all those kind of things. Okay, yes, it can be compensation structure. It can actually create it. And as we also go through, you might see some other ones, probably holding a security in a company you are researching or a company you are valuing. We'll also see another one as we proceed, probably being a director and also being in the research world. So we are going to see some of those things as we proceed. So this standard mandates full disclosure of both actual and potential conflict of interest. to clients, potential clients, and employers. And like we said when we are reading, your disclosures have to be prominent, and it has to be in plain language. Okay. Now, according to this standard, it is you, the member or candidate, that has the responsibility to determine the frequency of disclosure, okay, the manner in which you are to disclose, and also the circumstances that requires disclosure. So they actually left it to you. Okay. Yes, they actually left it to you. So CFA doesn't give you anything. It's you that determines the frequency of you disclosing to your clients, prospective clients, and employers, the manner, and also the circumstances that warrant disclosure. Now, let's focus our attention and talk about your disclosures to your employers. Okay. So if there is anything at all that can conflict with you not acting in the best interest of your employer, or you rendering unbiased advice, you have to let your employer know about it. So the reason is that so that your employer can have enough information to assess the impact of the conflict of interest. Okay. Yes. And also we know that if you follow your employer's guideline, and if you follow your employer's guidelines, can actually help to avoid any potentially embarrassing or even costly regulatory violations. Okay. So some of the things that you can disclose include ownership of analyzed stocks. So let me give you an example. So let's say I have or I own the stocks of Access Bank, and then my employer asks me to, research Access Bank and value Access Bank. Okay, that is thing I need to disclose. I need to let him know that I have some shares with that. And like we said, outside board rules. Okay, so let's say that I'm also one of the board of directors in Access Bank, and I'm also being asked to, value Access Bank or research Access Bank. I also need to disclose that. Okay, and also if there are some other financial pressures that can actually affect me, rendering unbiased advice, okay, or acting in the best interest of my employer, I also need to disclose that. Okay, I hope we're together.
Yeah.
All right, good. When reporting conflict of interest to employers, okay, you have to actually give them enough information to assess the impact of the conflict. Okay, so all the necessary information you have to actually give them. And if employers have any restrictions, on ground, and the goal of those restrictions is to, prevent conflict of interest, this standard says that you, the member of candidate, must comply with all those restrictions. So let's say that if employer says that the employees that are in the research whatever are not allowed to own certain kinds of stocks, if that is the case, so let's say these are the stocks that are normally researched or frequently researched by this company. So because of that, the employee says that all the employees or the research analysts that works with us are not allowed to own stocks in these companies that we do follow. Okay. If that is the case, then you, the member, you candidate, you must actually comply with that restriction so far as you have decided to work there. Okay. So you have to note that. What about disclosure to clients? Okay. Also, apart from employees, you should also disclose to clients any matter that can, be reasonably be expected to impair your independence and objectivity. Okay. So you are telling clients so that clients can actually be able to assess the motives and potential biases that you are going to bring to them whenever you are reporting to them. Okay. So there are some of the conflicts of interest that you can disclose to clients whenever you are dealing with them. So let's just quickly go through some of them. Okay. So the first one we have is we have a relationship with the issuer. Okay. So if you have any relationship with the issuer, okay, you actually have to disclose that. Okay. So example can be if there is an investment banking relationship with the issuer, okay, you have to disclose that, okay? If there is any financial relationship, if there is any, let's say broker or dealer relationship, all those things, you actually have to disclose that, okay? If there is any directorship or consultancy, all those things, you have to disclose that. If there is also any beneficial ownership of the stocks you are recommending, you have to disclose that. So let's say I'm recommending that my clients should buy First Bank shares, and I also already have shares in First Bank shares. This standard requires that I disclose that to the clients. Then if there is any broker dealer market making activity, we also have to disclose that. Then also, if we have any fee arrangements, sub-advisory agreements, or non-standard fee structures, this standard says that we need to disclose that. And finally, if there is any agreement in firms benefit directly from, so if there is any arrangement in which the firm will benefit directly from the recommendations, we also have to disclose that, okay? Yes, we also have to disclose that. So the one they noted in the curriculum is that, for example, if there is any rebate of the portion of the service fee, okay, you are going to get from some of this mutual fund. So some of this mutual fund, they might charge some of those fees to investors. So if you are going to get some of those kinds of benefits, you should actually disclose it to your clients. And like we said, the goal is for the clients to be able to assess your motives and also your potential biases for the recommendation you are making. Okay, so these are some of the things that we have to disclose to the clients. Then again, when it comes to cross-departmental conflicts, that one can also come into play. So conflicts can actually arise in the sell side and the buy side analyst role. I believe we know the difference between the sell side and the buy side.
The difference between what?
The sell side and buy side.
And buy side. No, can you explain that? Yeah.
Okay.
I don't want to assume I know.
Okay, tell me what you know first.
From English.
What you said now,
from English.
You know something. Okay, from English. Oh, I see.
Says like English, maybe you are like you are part of the company that requires the investor, or maybe a consultant to the company selling a particular investment. Then the buy side, maybe I'll invest like on the part of the investor. Is this investor? Yeah, on the part of the investor. That's English wise now. I don't know. Maybe that's correct.
Okay. Well done. You did a good job. All right. Okay. So when we are looking at the investment world, right, the people we normally call sell side are the people that sell their research reports. Okay. Yes, that's people that normally they research different companies, and they can take these different research reports, so they can research and recommend for you to buy or for you to sell a particular security. So when they are done with some of this research, they can actually sell those research reports to the buy side analyst. So the buy side analyst might be made up with the, what do they call them? All these corporate finance, portfolio managers, etc. So these are people that buy the research report from sell side analysts, and they can use those research reports to make investment decisions. I hope it's clear.
Yeah.
Yeah, so those are the difference between those numbers. So there are sometimes we can have conflicts. Okay, so those are the sell side and the buy side analysts, right? So the sell side actually can sell their research reports. Then the buy side analyst can buy from them and use those research reports to make certain decisions. So it can be like buy or sell decisions, and whatever decisions that they will need to make. So sometimes we might have a firm whereby we have both buy side and sell side analysts, and then because of the nature of their roles, there might be conflict of interest. Okay. Again, there might also be conflict of interest within the marketing division and the analyst. Okay. Yes, that one can also happen, whereby probably the marketing division might ask the analyst to recommend the stock of a certain company that they want to obtain business from. Okay, and that can create conflict of interest because the analyst might look at or research the company and find out that the company is not worth recommending. But because the marketing division is looking for business with that company, they might want to influence the analyst to, recommend that stock. Also, there can be conflict of interest for any broker sponsored and partnership. Okay. So if any of these conflict of interest come, requirement according to this standard is that those conflicts of interest has to be resolved. Okay. So since these conflict of interest are normally happening within the different departments in the firm, it has to be resolved. Okay. But if it's difficult to resolve those kinds of conflicts, then according to this standard, you are to disclose those conflicts of interest. Then we have talked about this ownership conflict. It's one of the most notable. So if you are not careful, by the time you are solving questions, you might be seeing that. So this is one of the most prevalent conflicts requiring disclosure under this standard. In fact, they actually noted that in the curriculum. Okay, so if you own any security of a company that you are recommending others to buy, this standard says that you are required to disclose that your ownership. Okay, so if you are a sell-side analyst, you are to disclose any material beneficial ownership interest. Okay, and if you are a buy-side analyst, you are to disclose your personal transaction reporting procedure. Okay, yeah, so you have to disclose the procedures that you have on ground for reporting, personal transactions. So make sure you note this. Then the final one we have under here is the conflicts as a director. Okay, so if you are a director, noted in the curriculum, there are three basic conflicts that may arise. So one of them is your duties you owe to your clients and your duties you owe to the shareholder. Okay, so let me give you an example. So imagine you're a research analyst and you're also a director, and then you are researching the company you're a director in. Okay, and you find out that according to your recommendation, you have to recommend that your clients sell the shares of that company. But you're also a director in that company. And if you make that recommendation, it can probably affect your position as a director in that company. Have you seen? It has created a conflict between your duties to your clients and also your duties to the shareholder of the company you're a director in. Also, being a director can open you up for some compensation that can actually create conflict of interest. Let's give an example. So imagine you're a director, you can actually receive warrants, which are simply options to buy a company stocks at a fixed price. Okay, and if you receive that warrant, if you recommend like sell, it can reduce the value of your investment in that company. Okay, so yes, so being a director can expose you to some of those compensation that can create conflict of interest. And the final one is that being a director can make you or open you to the position whereby you have access to material non-public information. And we know that according to the CFA Institute, any trade based on material non-public information is prohibited. Okay, so that actually affects you. So these are the problems. So according to the curriculum, if you are going to work in the investment service or you're providing investment service and you're also a director, this standard recommends that you are to be isolated from those making investment decisions through firewall or any similar restriction. Okay, so if you're a director and you also among those that provide investment service, there has to be an isolation between you and those making investment decisions because of these three issues that we have noted about being a director and also providing investment services. Let's look at some of the recommendations that you actually have to comply with in order to, be in compliance with this standard. So the first thing we have is that members and candidates should actually disclose any special compensation arrangements with their employers that can create conflict of interest. I think we have actually mentioned this on several occasions. So some of the examples are bonuses that are tied to short-term performance, commissions, incentive fee, performance fees, and related referral fees. So if you have any of this kind of special compensation arrangement, you have to disclose it to your employer. Okay. Now, there might be some occasion whereby you are working in a firm and the firm does not permit members and candidates to actually make disclosures or relevant disclosures to their clients. Okay, so if that is the case, you should actually document the request, and you might actually consider disengaging from that activity. Okay, since they don't permit you to make disclosures. Also, firms are encouraged to provide information about compensation packages in their promotional materials. Okay, so if you are a member or a candidate and your job is to manage a portfolio based on capital gains or appreciation, you should also disclose that to your clients. And then finally, in the recommendation, if you have option, okay, if you have an option to purchase the company's stock as a compensation, okay, the amount and the expiration date should actually be disclosed on the footnotes of any research report you are publishing. Okay, so yes, I talked about that option. So sometimes, because of the fact that you are working in a particular company, they can actually give you an option. Okay, so this standard says that you should actually disclose if you have those options in your custody. I hope we are together. Is there any question?
No question.
Okay. Bolaji joined us. I hope he can hear me.
Yeah, I can.
Okay. All right. Welcome. Okay.
Yeah,
so that is where the standard one 6A ended, which we called conflict of interest. Remember, we said your goal is to disclose. The other thing is priority of transaction. So this one is one of those ones that aligns with that fair dealing. Sorry, this one is one of those ones that aligns with that prudence, loyalty, and care. Okay, so remember, this standard, let's read what it says. Priority of transaction. It says investment transaction for clients and employers must have priority over investment transactions in which member or candidate is the beneficial owner. So in summary, this standard says that clients, employers, you. So you prioritize your interests of your clients, followed by interests of your employers, then your own interests. So remember, we still made some caveats when we are talking about this. So we said, in as much as you are prioritizing the interests of the clients, still make sure that you are weighing the benefit of your action on your employer. And remember also, we said, in as much as you are prioritizing your employer's interest over your own interest, still make sure that there are certain cases that that might not be the case. Remember, the case of personal whatever, and also the case of when you are going to do or blow your whistle. Okay, yes. So that is it. So So they noted in the curriculum that if you're an investment professional, you can actually profit from personal investments, but there were three things they noted. So one of them is that make sure that your personal investments does not disadvantage the clients. Also, that you don't benefit personally from clients' trade, and also make sure that your personal investments comply with the regulation. So these are the three criteria they noted in the curriculum that if they stand, you can actually benefit or profit from personal investment. So let me repeat again. It doesn't disadvantage the clients, and you don't benefit from the client's trade personally, and then you comply with the regulations. Now, when it comes to personal trading for clients, okay, sometimes you have to make sure. So remember, like we said, client first, employer second, then the member or the candidate third. Okay, yeah. So your employers first, your clients first, your employer second, then you third. Now, there are some times that you notice that the member and the clients are having, or they are co-investing. So let's say the clients are heavily invested in First Bank shares, and the member or the candidates are also heavily invested in First Bank shares. According to this standard, it's not a problem. But where it becomes a problem, make sure that your transactions does not negatively affect the client's investment. So far as that is the case, according to this standard, you can actually, co-invest with the clients. Now, let's talk about the standard for non-public information. So remember, we've discussed non-public information before. Okay, we have actually discussed non-public information before, and it also came up in this standard. So remember, you are not allowed to disclose this non-public information to individuals where that. So whenever this thing makes you a beneficial owner, you are not to disclose it. So if you have a non-public information, for example, about a particular company, you are not to disclose it with people that makes you beneficial. So let's say you are not to disclose it with somebody like your broker, somebody like any person at all that makes it beneficial, you are not to disclose. Okay. Also, for any other person, we are not allowed to, convey non-public information if that information is deemed material. So there are 2 points here. So first of all, if it's only what do they call it? If it's only non-public information, you are not to disclose it to any person that you have a relationship with that makes you a beneficial owner. Then again, if that information is also material, you're not to disclose it with any other person at all. Okay, so the points I want to make here is very, very important. So I would like us to pay attention. So first of all, remember, we have said clients, employers, you. Clients, employers, you. Okay. Now, this information is very, very important. Okay. So if we are talking about personal transaction, it can include your own accounts, your family accounts, or any other accounts where you have interest in. So let's say your political party account or whatever, charity. If you have a foundation, let's say your foundation account or any of those kind of accounts. So whenever we're talking about personal transaction, we mean any of these accounts, your own accounts, your wife's accounts, your family accounts, or any other accounts like your foundation accounts that you have interest in. All those things are included. Now, do you see this final point? It's very, very important. So if a family account is also a client account, this standard states that you should treat that account the same way you treat other clients' accounts. So I summarized it this way: no special treatment, no disadvantages. No special treatment, no disadvantages. So you're not going to treat that account special because it's a family account. And you're not also going to disadvantage that client. So one of the ways you might see this being tested is this. So let's say you have a family account you're managing, okay? And that family account is also a client account. And a hot IPO came into play. And because you don't want to violate the codes and standard, you decided not to, distribute some of the IPO to that account because it's a family account. You'll be in violation of this standard. Okay, so you don't give any special treatment to family accounts that are clients' accounts, and you don't also give any disadvantaged treatments to the account. If you do any of them, that will be a violation of this standard. Let's look at some of the recommendations that we actually have to adhere to in order to, be in compliance with this standard. Okay. So first of all, you are to encourage your firms to have policies and procedures to prevent conflict of interest in personal transactions. Okay. And we know that all firms have, unique characteristics. Okay. So each firm is recommended to tailor their own policies to their specific characteristics. And, you have to prominently disclose your policies to your clients and your prospective clients. So let's look at some of the basic procedures that the company can actually have in place in order to make sure that they uphold the requirements of this standard. So one of them is limited participation in IPOs. Okay, so sometimes these IPOs actually create a significant conflict of interest. So sometimes there might be limited IPOs or what we call hot IPOs, initial public offering. Okay, sometimes these IPOs tend to rise significantly shortly after the issue is brought to the market, probably because of high demand for that particular security. Okay, so because these new issues tend to be highly attractive and sought after, okay, the opportunity to participate might actually be limited. Okay, so if the firm wants to uphold what this standard says, one of the things that they do is that they might actually limit the participation of the members or candidates in these kinds of security. Okay. Yes, because you participating might actually take away investment opportunities from the clients. Okay, and then it can actually. So the key thing is this: so companies can actually limit it. Another thing is that they can have a strict limits on investment personnel acquiring securities in private placement. Okay, so that is also another thing that companies can actually do to also come in compliance with what the standard says. Then again, we can have blackout or restricted periods to from running clients. So probably there are certain times, let's say maybe during the period IPO is coming up, might actually set some period as blackout. So no investment professional is allowed to actually trade those securities for their personal accounts during some of those blackout periods. Okay. Yes, we can also use that. Then again, we can have some established or reporting procedures. Okay. Yes, whereby the investment what do they call investment professionals disclose things like their personal holdings, providing duplicate confirmation of transaction and clearance procedures. And finally, in order to meet this standard, members and candidates should disclose to investors their firm's policy regarding personal investing, okay? And then such disclosures has to be comprehensive and informative. So these are some of the recommendations that you have to meet to be in compliance with the standard. Remember, the standard is priority of transaction. Clients, employers, you. Okay. And remember the case I mentioned about a family account that is also a client account. You don't give them a special treatment, and you don't, to give them any disadvantaged treatment. So you treat them the same way you are going to treat all the whole clients. I hope we are together.
Yes.
All right, good. Okay, so the last standard we have under 6 is the standard on the conflicts of interest, standards on conflict of interest. Okay, so we under standard of conflict of interest is referral fees. Okay, so under referral fees, members and candidates must disclose to their employer, clients, and prospective clients as appropriate any compensation, consideration, or benefit received from or paid to others for the recommendation of products and services. Okay, so actually the disclosure is vital for clients and employers to assess potential bias in recommendation. Let me give you an example. So let's say I am an equity portfolio manager and one of my clients is looking for someone to manage their fixed income portfolio for them, right? So according to this standard, if I have someone that I normally recommend that manages fixed income portfolio for people, and this person pays me a fee for each client I bring to them, this standard on referral fees says that I need to inform the client that this party or person I'm recommending pays me a fee for that service. So it will actually help the client to assess my bias in recommendation and also the complete cost of the service. That's what the standard actually requires from you. Okay. The key thing, so this is the one you can see or notice when you are answering your questions. So this disclosure has to happen before entering into any formal arrangement. So it's not after the client must have met the person I recommended and has entered a formal agreement. I will now tell them, I even forgot to tell you, this person pays me something. No. Before them entering into a formal service, you have to disclose to the client, oh, I have a friend that manages fixed income portfolio for people. He's very good at what he does. But the thing is that he pays me for any clients I recommend. I have actually disclosed. Okay. Now, according to this standard, you have to disclose the nature of the benefits you are getting. So is it a flat fee? Is it a percentage fee? Is it a one-time fee? Is it an ongoing fee? Is it a performance-based fee? You have to disclose it to the client. And this standard also requires that you also have to disclose the estimated monetary value that you are going to get. Okay, yes, you have to disclose it. Okay, so it can be cash, it can be soft dollars, it can be in-kind payments. You have to, disclose them. This is a very short one. So the recommendation, okay, when it comes to recommendation, so you are encouraged to, let your employers to establish procedures concerning the referral fees. And so you see in some firms, the employer can decide to prohibit referral fees entirely. And some can actually say, okay, so we are not prohibiting, but we have a guideline for approving referral fees. And then finally, the employer should actually have their investment professionals inform the clients about the referral fee programs and also provide to the employers regular updates on the amounts and the nature of compensation received. So this standard actually requires that you do this at least quarterly. Is that clear? Are we together?
Yeah, I'm with you.
All right, good. Now we are at the last standard. We are at the last standard. Okay. So just give me like 3 minutes, or in fact, let's take this 3 minutes and shake our head. So this is the last standard we are doing for today. This one is the one that applies to CFA Institute members and charter holders. So you will notice that this is one of those standards that the CFA Institute doesn't play with. Okay, so I would like everybody to pay attention to this standard. Give me 2 minutes. All right, so let's continue. Like I said earlier on, please, I want everyone to pay attention when it comes to this particular standard, because this standard is the one that really applies to you directly. It applies. Some of the standards that we have been discussing applies to clients, applies to employer, applies to your profession, but this one now applies to you as a participant in the member, or as a participant in the CFA program or the CFA Institute. Okay, so we just have only 2 standards on this. Okay, so this is your responsibility as a CFA Institute member or a candidate. Okay, now the first one is conduct as participants in the CFA Institute program. Now, this standard says that members and candidates must not engage in any conduct that compromises the reputation or integrity of CFA Institute or the CFA designation or the integrity, validity, or security of the CFA Institute programs. Okay, so let's look at some of the overviews. So this standard actually governs your conduct as a CFA Institute member or candidate. So the goal of this standard is to maintain public confidence in the CFA charter's integrity and ethical standard. That is the goal. So that's why CFA, they take this one serious, okay? So their goal is that they want to maintain their integrity, and they also want to, maintain that public confidence in their ethical standards. Okay, so any action at all that will undermine public confidence in the merits and ethical conduct associated with CFA charter, according to this standard, is prohibited. Okay, so we are going to see some of the things that these standards prohibit. I hope we are all here.
Yeah.
Okay, good. 1, giving or receiving assistance during examination. In summary, cheating in the examination is highly prohibited. I remember giving us an example of my friend, and I told us what happened to him. So during his own exam, he actually didn't submit. He didn't drop his pen on time when they said that we should drop. Because of that, they didn't publish his results, right? Yes, so any form of cheating in the exam. In fact, I remember those days when we used to go to Ghana. When we get there, even my friends that I remember on one of the occasions, I think one of my friends was sitting close to me. I didn't even, immediately I just entered the exam hall. I just greeted the person. I just did as if I didn't know the person, right? Because I didn't even want any appearance of, as also person called you in the hall. So any cheating, giving or receiving, is a violation of this standard. Okay. Also, another violation is any. So if you violate any of their, rules, program rules, regulation, and testing policies. Okay. We are going to talk more about some of these. I think I have actually talked about some of these testing policies. So when they are talking about testing policies here, they are talking about things like your calculator policy. You already know that there are only 2 recommended calculator that you are required to come to the exam hall with for this exam. Okay, so make sure you come to that exam with that calculator. You also know that close to the exam, there is something that they are going to send to you. It's like your admission ticket into the exam hall. So the basic thing, you must come with your international passport. You must come with that document. You have to print it and come with it. And also, you have to come with your approved calculator. So close to the exam, they will let you know about your personal belongings, things that you can bring to the hall and things that you can bring. Okay. So all these things, they call them the testing. So you have the calculator policy, you have the personal belonging policy, you have the candidate pledge, you have the all those things. So you sign the candidate pledge and whatever to make sure you don't violate any of those. Then again, disclosing any confidential information is also a violation of this standard. So, when they talk about confidential information, basically they mean any question that is appearing on the exam day, okay, or any question that is under consideration. So if you're among the people that sets the exam question, that is a confidential information. Another confidential information might be, the exam deliberation processes, okay? Yes, that's also another one. Another one can be any information on how the exam questions are being scored. All those things, according to the CFA Institute, are confidential information, and you are not allowed to disclose those information. Then again, any attempt to bypass CFA Institute security measures is also a violation of this standard. Improper use of CFA Institute association for personal or professional gain is a violation. And finally, if you misrepresent any information on your professional conduct statement, okay, so once you become a charter holder, you'll be submitting your professional conduct statement. So if you misrepresent any information on that professional conduct statement or in your continuing education program, that would be a violation of this standard. So we have talked about this confidential information. Like we said, you are prohibited from disclosing confidential information. So any specific exam question that was tested, so you see a question that looks like this: a particular candidate, after writing the exam, rushes to a social media account and wrote, this CFA exam is too difficult. Imagine they were asking us for Macaulay duration. That's a violation of this standard. So any broad topic areas or formulas, tested or not tested, you are not to disclose it. So you're not going to say that, I prepared for what do they call time value of money, and I entered the exam hall. I didn't even see question on time value of money. Okay, so you are prohibited from disclosing specific question, broad topic areas or formulas, either tested or untested. And according to the CFA Institute, all their exam aspects is considered confidential until when they release them public. Okay, so if there are any questions that were tested previously in the exam, you remain confidential till they decide to probably use some of those questions as practice questions. Okay, now, but this standard doesn't prohibit you discussing non-confidential information or curriculum materials like we are doing now. Most of these materials we are doing is we are teaching you from the curriculum, and you can also learn from yourselves from the curriculum. That is not a violation. It's actually allowed according to the standard. So, like we have said before, if you violate any of the testing policy rules, it's actually a breach. And I have told you the testing policy rules. Okay. So on your exam day, remember again, you are going to have the calculator policy. There's a required calculator you must bring to the exam hall. Okay, it's a must. You also are going to sign a candidate pledge. Under that candidate pledge, you are going to read it and see some things that you are going to say you are not allowed to do. Yeah, and if you violate it, it's a violation of the testing policy. Also, personal belongings. So they are going to tell you things that you can bring and you can't bring into the exam hall. You have to adhere to that. And they're going to show you a place where you can keep your personal belongings. Okay? Yes. So if you're among those that are involved in exam development, okay, so you're among the people that develop the exam questions, or you're among the proctors that administer the exam, or you're among those that grade the exam, you must actually maintain confidentiality. If not, you will be in violation of this standard. Now, when it comes to expressing opinions, you are actually allowed to, disagree or express an opinion about, CFA Institute and their procedure. So I can say CFA Institute, they overdo, they show themselves, right? They're just making this exam unnecessarily difficult, or they are making it. So you're actually allowed to explain your own opinion. So far as it's your own opinion. You can disagree with their policies, their procedures, or their positions. You can actually do that. It's allowed, right? Yes, but the problem is now when you are expressing your opinion, make sure you don't disclose a specific exam content. Okay, that will now be a violation. So you saying, if I write the exam, I came out and say, the CFA exam is difficult. It's an opinion, right? But I shouldn't now come and add, imagine they asked Macaulay duration. That is now a violation. I hope we're together.
Yes.
So you are free to express your opinion, but make sure that in doing that, you don't review a specific, exam question.
But the Awala is just
All right.
much. That's all this, to be honest, it's just funny.
Yeah, so yeah, Ivan, I believe that's why they added this one because they obviously know that people will talk, right? So they say you are free to talk, but as you
Yeah,
are talking, don't just add, don't
answer.
just disclose their confidential information. Yeah, so you can say that. Imagine they telling somebody to come and write this whole thing in one day, and telling somebody to all this stress, everything. Imagine. You can even they don't even have what do they call it like ACC that say if you get 50% you will pass. You know, those
Yeah,
things you can say. So you are free. They say you can talk. No problem. They're okay. But their own is that you should not disclose specific confidential information while you are doing that. All right. The last standard we have it's on reference to CFA Institute designation and the CFA Institute program and then the CFA Institute. So let's read what the standard says. So the standard says that whenever you are referring to the CFA Institute, your CFA Institute membership, the CFA designation, or your candidacy in the program, you must not misrepresent or exaggerate the meaning or implication of membership in the CFA Institute, holding the CFA designation, or candidacy in the CFA program. Okay, so that's what the standard says. So the goal of this standard is to prevent promotional efforts that make promises or guarantees tied to the CFA program. So if someone starts saying something like, I can, manage your portfolio better because I'm a charter holder. That's a violation of this standard. It's not allowed. Okay. So you don't make any promotional effort or statements that promises or guarantees, any particular thing just based for the fact that you're a charter holder. It's not allowed. Okay. So you are not also, allowed to exaggerate the meaning or the implication of the CFA Institute members. Okay. So any of those things is prohibited. Okay. So don't exaggerate. So you coming now to say that because you're a charter holder, you can do this, you are the best at this, those things are not allowed. Okay. So any statement that implies superior performance from someone with CFA designation clearly is not allowed. Like this example I've been given. Okay. So claiming to a client that you are in a better position to manage their portfolio. Why? Because you're a CFA charter holder. It's a violation of this standard. So let's see some of the allowable statements. So these are some of the things that they don't allow, but let's see some of the things that are allowed according to this standard. Okay. So if there is any factual statements you are making about the positive benefits of earning CFA statement that can be verified, is actually allowed. Okay. So like if you go to the CFA site, you see some of the benefits that they listed on their sites that you can gain from having CFA Institute charter hold, being a charter holder. So you can also make those statements. So sometimes when we are, telling candidates about the benefits of having CFA, so we can make some of those statements. It's actually allowed. Okay. Now, any statement that emphasizes ethical conduct, professionalism, and the rigor of the CFA program is actually allowed. So I can say, the CFA program, it will require you to go through 3 levels of exam, which will require you dedication, studies, this, that, all those things are allowed. I can also say that someone that has, the CFA or pass the CFA exam is of a high ethical, whatever, because of the nature of the CFA ethics or whatever. So all those kind of statements are actually allowed. Okay, I hope we're together.
Yes, we are.
Yes. So those ones are allowed. Then any claims about the relative merits of the CFA Institute, their programs are actually acceptable, but the goal is that you have to make sure that you are implicitly or explicitly stating that it's your own opinion, right? Yes. So I can say that since I became a charter holder, the way I understand mathematical concepts or quantitative concepts now, quantitative analysis concepts, it's now, I can say that since I became a charter holder, my financial analysis skill has greatly improved and all those kinds of things. So it's a relative merit to me, right? Yes. It doesn't mean that every other person that becomes a charter holder, that their financial analysis skill will improve. I can actually state that since I became a charter holder, my financial analysis, so I'm stating it as my own opinion, okay, either implicitly or explicitly, it's actually allowed, okay? So if any statement you want to make and you don't want to make it as your own opinion, make sure that there are facts backing it. So I can say that we have over 190 something thousand charter holders all over the world. It's backed by facts, right? Yeah, so make sure that any statement you are making and it's not an opinion, you have to support it with facts. So, this standard actually applies to all forms of communication, either written, oral, or whatever, okay? So that also has to be included. And it includes materials, personal resumes, interaction with public and clients or prospects. Now, let's talk about the CFA membership. So this one is actually important, CFA membership. So, CFA Institute members, you can be a regular member. You can also be an affiliate member, okay? Yes. Once you meet the membership requirements, you can be a regular member. So to be a regular member, let's talk about what you need to do. So if you want to be a regular member, first of all, you need to pass your level 1, level 2, and level 3 exam. Then you need to submit your, your 3-year required working experience. Okay. You need to submit your required references, either 2 or 3. Okay. Depending. So if they are charter holders, 2 is enough. If they are non-charter holders, 3. Okay. So once you submit those items, the CFA Institute, they will go through your submission, and once they approve it, you are now required to pay your membership fee. Okay. And once you pay that fee, automatically you become a member. Now, once you still become a member, you need to every year submit what we call the professional conduct statement and make your applicable fees. You do this every year. Any year you don't pay this fee and submit the professional conduct statement, you become an inactive member. Okay? And whenever you become an inactive member, you can't present yourself an active member. So you can say, if you become an active member, you can't claim that you're a charter holder that period. So you do these 2 things. Okay? So like if you go to the CFA site, I can't remember the exact, it's been a while now, but I think the last time I went there, I guess there are about 300 active charter holders in Nigeria. But that doesn't mean that the total charter holders in Nigeria is not more than 300. Okay. So, but as at that time, probably the active is around that range. I can't remember, but I guess it's around that 300 or there. But you can actually go to the CFA site even after this lecture to go and check how many active charter holders we have. Okay.
Okay. How
So
much? How
whenever
much is the subscription or the membership fee?
I guess it should be around $200. Should be around $200. Should be around $200.
Wow. Okay. Thanks.
Yes. Be around $200. So I think, and the window period, in fact, I was even thinking about something like that this morning, because I know the window period for payment is normally around May. So by May right now, every other person that is a charter holder, all their subscription will expire. They need to go and renew around May. That's the window period. So it's around $200. So we need to start gathering our money now to go and pay another one, to go and pay. We need to start gathering our money to go and pay. If not, you'll become an inactive member. Okay. Yes. And if you're an inactive member, you can't claim that you're a charter holder or active charter holder at that moment till you do those 2 things. Okay. So those are the requirements. You have earned the right but they still said that you should use it in a way that don't misrepresent or exaggerate the meaning or the implication of being a CFA charter holder. Okay, so and like we said earlier on, charter holders have to meet their membership requirements to continue maintaining the rights to use the CFA program. Okay, so let me give you some examples of some things that you need to note. Okay, now this is the way. So if I want to, once I become, so if you notice, this is the way I wrote my name on my slide. I wrote Nemeka Obi CFA. Okay, so this is how you do it. So once you earn the rights, you can actually put your name like this and put CFA by the side like that. Okay, so if you do it, that's a correct usage. So this name, you are not allowed to come and bold in this CFA. Okay, that would be exaggerating. That would be exaggerating, using it in a way to exaggerate it. You are not also to come and put this CFA in small letter. Okay, that will also be a violation. You're not also to come and italize this CFA. So probably italicing it, that is not also allowed. Okay, so you put your name, you put comma, you put CFA in capital letter. Straightforward. That is a way to do it. I hope we're together.
You see why I keep saying the awala is too much. The awala is just too much. Is it not my own? It is my own. It's my name that I'm putting it behind. Now, which one is I can't italize it? And definitely, I mean, people don't really italize things like that.
Mm-hmm.
But then the other question I want to ask is, I know there was a time, this is a long time ago. I don't know if I've not been hearing it of recent, but I think around 2015, I used to hear a gist of, well, if you have CFA, you are not to put other certification beside it or something like that. Like you now in Emeka will be, like, you cannot put CFA, CCA. I don't know.
The lie.
It was a
That's
lie,
not
right?
true. Go to LinkedIn and go and search. You can just search CFA. You will see CFA ICANN, CFA ACCA, CFA FRM, CFA Kaya, and all those things. CFA MBA, PhD. Just go and type it in LinkedIn. You will see plenty. That one is not true. Don't mind them. So this is the way you do it. Okay. Now, so these are for this one is for charter holders. Okay. This one is for charter holders. So this is the way you put it. Now, you are not allowed to associate the CFA with pseudonyms or online profiles with the goal of hiding your designation. So somebody cannot just come and put a name like this. So if I want to put CFA, you have to put it with a name that they know you with. So somebody cannot come and put something like this, Crazy Beer CFA. It's a violation of this standard. Okay, so that person should CFA. Or you put one nickname, and put CFA by the side. It's also a violation. You are not allowed to do that. Okay, so you have to put with the name they know you with. That is how you actually reference to this. So these are for people that have earned the rights and to use the CFA designation. Now let's talk about candidates. So what about candidates? So candidates are, so we are going to first of all start with definition of candidate. I hope you can still see my slide. It went off, right? So that's for members, charter holders. So what about candidates? So first of all, let's still define who is a candidate. Like I said earlier on, a candidate, first of all, is someone that is actually registered to sit for an exam. So you have registered to sit for November, you are a candidate, you are a level 1 CFA candidate, right? So for you to call yourself a candidate, there are two criteria. One, you are either registered to sit for a particular exam, or you have actually sat for that exam, but your result is not yet out. Okay, so if you have registered to sit for an exam, level 1 exam, you're a level 1 CFA candidate. Before your result is out, you are still a level 1 CFA candidate. But once that your result comes out, depending, So if you pass, you are not a candidate that time till you register to sit for the level 2. You become a level 2 CFA candidate. I hope it's clear. So,
Yeah.
so for example, you can say this. You can say that if you pass your level 1 exam, you can actually say, or you haven't registered for level 2, you can say, I passed the level 1 CFA program. Okay. Now, once you now pay for the level 2, you will now become a level 2 CFA candidate. Okay. That is actually how it works. So a candidate is someone that has actually either registered to sit for an exam or have sat, but they are still waiting for their results. Now, you can actually refer to your participation, okay? But you must clearly state your status, okay? So let me give you an example. I can say something like this. I can say that I am a level 1 CFA candidate, okay? I am a level 1 CFA candidate. You can also say, I have passed. If you have passed the level 1 exam, you can say, I have passed the level 1 CFA program, okay? You can say, I am a 2024 level 1 CFA candidate, or a level 1 candidate in the CFA program. I am a 2024 level 1 candidate in the CFA program, okay? But you are not to come and put your name and put CFA. Let me give you an example of violation for this. So this is a violation. So somebody puts their name.
See what you're typing again or writing.
Yeah, somebody put their name again and now put this thing and now say CFA, comma.
Sorry, I can't see what you're
level 1.
typing.
Can you see it now?
Yes.
Okay, good. Okay, so if somebody writes something like this, okay, and writes CFA level 2 is a violation. Okay, and this is a violation of the standard. It's not allowed. Or somebody writes this and writes and adds something like this: expected 2026. It's not allowed. Okay, or somebody writes something like this and maybe 2026 and now say charter pending. It's not allowed. Okay.
The person must be a clown.
So they're just like trying to let you know that those things are not allowed, right?
Okay,
That for
so
you to
Mr.
I'm with you.
Yeah, so how do one if you want to indicate that okay, you're probably in level 1 and level 2, how do one indicate then? So that your employer can know, or your prospective employer can know that you're on this particular level.
You can actually put it. You can put something like you can put like, if you have passed the level 1, you can say I passed level 1 of the CFA program. Okay.
Okay, you can put that in your CV, right?
Yes, you can put that in your CV, sure. I passed the level 1 of CFA program. Or if you are still a candidate, you can put that I am a level 1 candidate in the CFA program. Okay.
Okay. So
yes,
what of on LinkedIn? How can one indicate on LinkedIn?
Go to LinkedIn now. You see, just go and type LinkedIn. You see how their people are putting it. There are many of them in LinkedIn actually. You see the process. Just type. Maybe you can just type on LinkedIn. Just
I think most of the time, what I see on LinkedIn is CFA Level 1 passed.
Yes.
That's why I see on LinkedIn. Then if you're already a level 2 candidate, some people now put CFA Level 2 candidate, which technically means that you've passed 1 and you've already registered for 2.
Okay, writing CFA Level 2 candidates is permitted.
Yes, it's actually fine. Oh,
yeah, but sir,
okay,
what you said, for you to put a candidate, that means you must have registered for the exam. Is that not what you said?
Yes, you must have registered. Yes.
So
Yes.
like me now, I've
You
not
must have-
registered, so I can't claim CFA Level 1 candidate because I've not registered for the
You're
exam.
not. Yeah. Yes. Yes. Once you're not registered, you can't claim that. Okay, I think we have exhausted our time. I would have even loved to. Anyway, this is the end. So we are going to still continue here in our next class.